Good evening, ladies and gentlemen. I'm so sorry. The whole setup takes a bit of time to adjust, so I'm kind of uh, adjusting to the streaming session. All you lovely guys, welcome to the stream. Welcome to Zbit. Welcome to the official channel of Zbit, where we talk everything that's related to cryptocurrency, financial markets, and financial products. So, guys, a very, very warm welcome to all you guys. You all know me. You've been seeing my face. As you all know, my name is Nida Freen, and I'm the host for Zbit channel, and you've been watching me for quite some time. I'm just waiting for the people to join in the stream. People joining in from within the application, some of you joining from outside, so that we can start our crypto session today. Guys, my name is Nida Freen, and as you all know, I come live between 4 to 8 p.m. Dubai time, and that's where we kind of talk about so many things that's about cryptocurrency, technical analysis, fundamental analysis, about projects, about airdrops, about what not we talk. So these sessions are going to be fruitful for you guys. So don't worry if you're somebody who is just starting out in the crypto world. We've got you covered. We have everything that you need in order to start your crypto journey. So don't worry on that front. I'm a bilinguistic, I'm a bilinguistic speaker. So don't worry if in case you want to talk something to me in Hindi and Telugu, sorry, not Telugu, Hindi or English, I'm okay to speak Hindi and English. So if you need something to be talked about, then you guys can choose to talk to me in any of the languages. All right. Guys, let's just begin the session. Today's session is again, as usual, is going to be a 4 hours session where we talk first a bit of technical, a bit of market analysis, both in crypto markets and in the financial market side. And then we proceed to discussing about various other topics that we talk for the day. Other than that, what we also intend to do is we do a bit of technical and fundamental analysis on the crypto side. So if you're just beginning out, you don't know how to start your spot or futures trading, I will guide you enough on how to go about with taking your crypto trades. So at the moment, you can see now that we have begun our day, now that we are starting our day, Bitcoin trading at 118, 888, Ethereum is at 4384, up by 1.94%. BNB is 1048. Wow. Looks like BNB is on the bull run, and it's like just moving in fast pace. Like I really didn't expect it to. Like yesterday, I was thinking like to reach 2022. I was thinking maybe it might dip down to 900 or 800, but that's quite good to see. It's reached 1048, so it's up by 2.43%. Solana 225 again. Solana is looking like great today, 3.57%, and XRP at 2.97. It's up by 1.12%. The overall fear and greed index stands at 51 neutral. The market capitalization is standing at 4.08. So guys, you remember when I started the session yesterday, it was standing at 4 trillion US dollars yesterday. But yes, we can see 0.8 US, 0.8, 0.8, 0.08, sorry, 0.08 trillion has been added yesterday. And the volume basically standing at around 87.26 billion. That's also good on that side. Let's have a look at the coin market cap 100 index, and then we'll go through a bit of, like some reasons to understand why crypto markets are up and down, what the phases, and whether it's in positive, negative. So let's, chit chat on that part also. Avalanche, Leo, Aave, BitGet, MYX, Pi, Memecore, Plasma, Sky, Immutable, Tether Gold, Pax Gold, so many of them, like I think around minimum of 8 to 10 cryptos looks like they are in negative. Rest all of them seems to be following Bitcoin rally. As we all know, some most of the cryptos follow Bitcoin footsteps. So I think that's what is happening on the other crypto side. So let's just begin what's happening on the crypto side. So the global cryptocurrency market capitalization has risen to approximately 4.08 trillion. You can see this with Bitcoin trading at 118 and Ethereum at 4386 right now, notably 98, not 98, I would say it's like 90 to 95 of the top 100 cryptocurrencies are showing positive momentum, indicating a broad-based market rally. This surge is partly attributed to macroeconomic factors, including expectations of the financial policy easing and a potential US government shutdown, which has driven investors toward digital assets as a hedge. So we all know yesterday was a day where basically there was a shutdown that kind of has impacted the overall markets. Now, what that could mean is like the uncertainty has created some kind of confidence in the traders that they have, looked for investing or trading into, say, like, riskier assets like crypto. On the regional development side, in Asia, if I talk about the Token 2049 conference in Singapore, has attracted around 25,000 attendees, featuring entertainment and discussions of the growth of stable coins. The event underscored Asia's increasing role in the global crypto system ecosystem. So there has been a lot of discussion in terms of stable coins being used as a payment solution, should be like, introduced in the ecosystem for various payment solutions and whatnot. So I think this basically conference in 2000 token 2049 conference in Singapore, of course, have lay down any a different base structure altogether, increasing the role in the global crypto ecosystem about the stable coins and the growth of stable coins. In the Central Asia side, Kazakhstan has launched its first crypto investment fund, aiming to position the country as a hub for digital finance and blockchain technology. So each country moving towards some kind of growth and some kind of new thing coming up on their radar is definitely a good sign for all of us. So they are moving towards global growth. They are moving towards a lot of use, a lot of adoption in that matter. And yes, it is again good news for all of us. Crypto markets basically in 2025 are emphasizing on community engagement, educational content, and influencer partnerships. So platforms like Twitter, Discord, Telegram, and Reddit are central to building loyal user bases. Collaborations with trusted influencers and the creation of informative resources help establish credibility and trust within the community. All right. So that's on the overall marketing trends. Coming to the challenges and the considerations that we have in the crypto industry for all of us and to watch out is like, despite of the positive market momentum, the industry still continue to face challenges, and we all know that for a fact. So the security concerns, high profile scams such as the hijacking of Matt Hardy's Instagram account to promote a fraudulent cryptocurrency highlight ongoing risks in the digital space. So while there is all kinds of regulatory framework coming into picture, a lot of things being under scrutiny, but still the security concerns in crypto industry remains for what we call it as question mark. People who know way too much, I think those are the people basically who always abuse and who take advantage of such kind of things. Uh, what I mean to say is like too much of knowledge also is sometimes very, very risky, and too much of knowledge can be very, very harmful. So people who are basically taking wrong advantage of all of this, like, we need to basically be cautious about all of this. I don't want any of us to basically get scared of the things that are happening. what I intend to say is that we need to make ourselves aware of everything that's happening across, so that uh, we are not falling the victim over there. We should be somebody who should be knowledgeable enough to not fall victim to such kind of things. So I think government any which ways is basically taking care of all of these things. So don't worry on that front. I think security concerns, though there might be scams, frauds, and whatnot, that will keep on happening, but there will be proper support from the government, the regulatory framework, for us to basically safeguard ourselves. So don't worry on that aspect. Now, India's financial authorities have intensified actions against offshore cryptocurrency platforms for non-compliance with anti-money laundering laws, signaling a global trend towards stricter oversight. I think after US, I don't know, I think India is on the, basically run where they are walking the footsteps of US there, that they don't wish to continue any anti-money laundering laws or anti-money laundering acts. That's why, they are always on the stricter side, where they basically want to intensify actions against the people who are doing anti-money laundering for sure. So nobody can escape taxes when it comes to India or US. I think they both go hand in hand, and that's what is happening. So are you a good and a regular taxpayer? Are you somebody who do not deviate taxes or evade taxes in any ways? Then you don't have to worry about it, because that's not meant for you. But yes, if you are somebody who is trying to do any kind of such illicit, illegal activities where basically you're evading taxes, which is such a big crime in the world of, it's a biggest financial crime that you can fall into. So please don't get yourself involved into such kind of things. A lot of people, by listening to other people or by getting influenced by some people, they kind of get into such kind of illegal activities. Don't do that. Don't fall victim to all of this. If your trading volume is not that great, and you're like trading at a very like low levels, or like not so great amounts, I think you won't even be charged those kind of taxes. It's only the businesses, especially who are like trading in big volumes, has to basically worry about paying heavy taxes. But as retail traders, I don't think you guys are even like you're going to pay that heavy taxes. 1% TDS, which also in some cases is like refundable if you apply for it. And some of the crypto platforms are even giving you the exemption of not paying those TDS, and it can be like some of them are like even charging like 0.1%. While some may be at a standard fees of 1%, but like some of them have lowered their fees, is like the lowered the TDS tax, like the tax deducted at source expense too. So I think it's not too great, and it's not going to impact as a retail trader on you, as in like we're paying very heavy amounts of things like that. So don't try to evade taxes, guys. Paying taxes is always a good idea, is always good, because the more you are in the in good books of government, and you're in the good side of your country, basically you will basically be able to reap rewards. Taxes are a way basically which will in return, I know in some parts of India, even though you pay tax, it doesn't really make sense because you hardly get any kind of benefit out of it. But try paying taxes so that you can reap rewards at a later time. Whenever you are in the good books of government, you may see that something like returning back for sure. So yeah, at the moment, the current market conditions, including easing financial policies and strong fundamentals in major cryptocurrencies, they've led a renewed bull run in the coming months, and the industry must navigate challenges such as the regulatory developments and security threats to maintain sustainable growth. That's on the crypto markets front. Now let's move on to what's happening in the financial markets. As of 2nd October 2025, the global financial markets are all exhibiting a mix of optimism and caution influenced by US economic data and the geopolitical developments and central bank policies. So the US markets currently, the US stock markets are showing positive momentum with S&P 500 and Nasdaq futures up by approximately 0.17% and 0.37% respectively. And after this, there is a modest rally on Wednesday driven by investor optimism despite concerns over the ongoing government shutdown. So I think this government shutdown, whatever has happened yesterday, has definitely, driven the prices of cryptos, both on the cryptocurrency as well as on the financial markets. The European markets, basically, they've reached new record highs and buoyed by investor confidence and expectations of easing monetary policy. So there is definitely going to be another FOMC meeting, I think, which is scheduled for 28th and between 28th to 29th of October. Not really soon, but at the present, in this month, there are definitely going to be some good events that are happening across the globe. I think yesterday I told you guys about a few of them. Some of them are going to be held in Dubai. Some of them are going to be held in Barcelona, Spain, in the European market side. So you have so many events that you can attend, and there will be global leaders and innovators across the globe joining in on the session, where you will be part of those. If in case you would like to, you can be part of it both online or offline. Some of them get broadcasted on YouTube channels and various other financial news channels and all that, so you can be part of those and get some great insights on what the leaders of the world has to say, because they are basically the people who are behind these projects, who are bringing in new technologies, bringing in new innovations into the world. So I think you need to reach out, you need to be part of those sessions, so that those sessions can give you some great amount of knowledge which can help your overall trading like journey that you are onto. The reason I tell you why you should be knowing all of that is because your trades, whether what they speak about, these people are the most influential people that we can talk about, and anything that is being said or being talked about by them kind of brings about some kind of positive or negative impacts on the market. So we need to be updated about all the influential people who are there, to influence these markets. So that's why be part of these sessions, learn as much as you can, and then get great amounts of knowledge through these sessions. On the Asian market side, Asian tech shares rallied, particularly following partnerships between South Korean firms, Samsung, NSK, Hynix, and OpenAI, signaling strong investor interest in the technology sector. So, as usual, the technology, the tech stocks have been like, rallying as well. Like on the other side of the story, if we talk about just um, not just about crypto markets or the Asian or the US markets, but Asian and not US and the European markets, but in Asian markets also, there has been significant impact, especially on the global tech sector side. So that's again a good news. So the right now, as we are talking about, guys, you can see very clearly the prices of each cryptocurrency is positive, and that's definitely a positive thing that's happening everywhere. So moving on to the commodities and the currency markets. uh, gold, basically gold prices have surged to a record high of 3,895.09 per ounce before settling at $3,880, driven by expectations of Federal Reserve rate cuts and a weaker US dollar. Guys, we have discussed so much about weak dollar about like 2 to 3 days ago, and I did one full session, like almost about 3 to 4 hours, about how the various factors impact the prices of crypto or the financial markets. So let's also see maybe a little bit of it at a later stage, like when we are talking about all these things. So this definitely has impacted the the gold prices for sure. On the oil prices side, oil prices, they've rebounded after 3 consecutive days of losses, supported by concerns over potential higher or tighter sanctions on Russian crude and increased Chinese stockpiling. So there is Brent crude futures rose to $65.72 dollars per barrel, while West Texas Intermediate increased to $62.12. So there is like great amount of pressure on gold, sorry, not gold, oil. And oil also is seeing some kind of price surges, and that is what is happening. The Brent crude, basically it's one of the type of commodities like crude oil, like you've heard about that word or the name, right? So that basically has rose to around $65.72, and the West Texas like West Texas Intermediate, which is basically again a different like commodity on the commodity front, $62.12 is what it has rose to. So basically, it is overall the yesterday's the shutdown has definitely impacted not just crypto, not just US markets, but also the commodity side of it. So on the US dollar front, the US dollar has declined to a 1 week low, and reflecting investor expectations of imminent interest rate cuts by Federal Reserve. So what's lying ahead for all of us is the rate cuts, which is likely to be seen in coming few days, weeks, or whatever, like maybe by the end of the month or something. So that's on that side. On the US economic indicator side, private payrolls, a weaker than expected ADP private jobs report has fueled speculation about potential federal rate cuts, with investors now pricing in 2 cuts by the end of the year. And the ongoing US government shutdown has raised concern about its impact on economic data releases and federal services, contributing to the market uncertainty. On the global economic concerns side, China, basically persistent weakness in China's property sector and broader economic challenges have continued to pose risk to global financial stability. The Reserve Bank of Australia has highlighted issues as these issues as significant vulnerabilities. Geopolitical risk, tensions in the Strait of Hormuz remain a concern for the global oil markets, with potential disruptions to one of the world's most critical shipping routes. I think we've discussed this a little few days ago. Strait of Hormuz because is one of the greatest hubs in I think I'm not sure it is on the Pacific side. What exactly? It's near the Iran-Israel side. I think that's where it is, and that is a biggest hub for import and export of oils, and that basically is definitely being disrupted, and that the shipping routes through which there used to be like a lot of shipping routes through that Strait of Hormuz, and that is being disrupted at the current scenario where global oil markets are, in a concern. So the markets are showing resilience. Investors remain cautious due to ongoing geopolitical tensions and economic uncertainties. The potential for federal rate cuts and easing monetary policies will provide and may provide support to the markets in the near term. However, the evolving situations in the US and the global economic challenges are warranting close monitoring at the moment. Okay, I think just a sec. So it's a narrow waterway connecting the Persian Gulf to the Gulf of Oman and Arabian Sea, and it sits between Iran north and Oman and the UAE south, and it's only about 21 miles, which is like 33 kilometers wide at its narrowest point, but much narrower shipping lanes, like 2 miles in each direction. So it's the most critical oil checkpoint in the world, and around 20 to 25% of global oil consumption passes through here daily, like amounting to 17 to 20 million barrels per day, also vital for liquefied natural gas exports, especially from Qatar. And countries like Saudi Arabia, UAE, Kuwait, Iraq, Qatar, and Iran depend heavily on this route to ship energy to Asia, Europe, and the US. Geopolitical significance of Strait of Hormuz. Iran's leverage. Iran has repeatedly threatened to block or disrupt traffic if pressured by sanctions or conflicts. US and allies. The US Navy Fifth Fleet, based in Bahrain, patrols the area to secure shipping lanes and flashpoints for conflicts. Any military tension in the Middle East often revolves around this strait. So this is a very historic place, and it's short. Strait of Hormuz is like the world's energy lifeline, and whoever controls or disrupts it can influence global oil and gas prices, making it a permanent hotspot in geopolitics and the markets. Uh, I mean, we don't need to get into too many things about its geography or history of it. It's just that understand that it's a global oil, place where basically a lot of import and export of global oil happens. And if that zone gets impacted or gets disrupted, that's where the prices of oil tends to go high. So we have to be just careful on that front from only that perspective, not getting into too much of maybe too many things about its geography or history. We don't really have to care about that, so that's perfectly fine. Okay, moving on, guys. I am going to take a small 5 to 10 minutes of break, and then we'll talk about few more things. And the things like how did the US government shutdown impact the crypto markets? That's something that we will discuss. And then post that, we will have some more topics coming in. We will keep on talking about different things. Anybody who would like to ask me any kind of questions, you're welcome to do so in the stream, whether it's to do with cryptos or about spot and futures trading, whatever. So let's just continue, and I will be talking about all of this in a little while. So let's just catch up after 5 to 10 minutes of break. So guys, I'm back, and yeah, so what we were discussing was about the US government shutdown. So yesterday there was an event that has impacted the overall markets, and that kind of has taken the markets for a overall upward trend. So I have in the comments user 999052 how to trade. So I will show you, my dear, how we start, where to where to begin, what to do, and all of that. But before I can actually help you out with that, can you tell me what is your level of experience in crypto market, so that we can understand where to begin and how to proceed and all of that. So can I understand 999052? What's your level of expertise, or what's your level of experience in the crypto industry or into the trading journey, uh, before I can actually help you out with that, because I am going to talk basis that user 999052, can I know your experience in trading, like spot, futures, whatever you trade into? Are you a beginner? Guys, if you don't tell me if you don't answer to my question, what I'm asking you, I wouldn't be able to tell you things. However, to make it a bit easier for, I will show you on the screen how you start, how you do whatever you have to do. So here's your Zbit platform. Okay. I think you guys, because you guys are joining from within the app itself, I'm assuming that you are right now into the app itself. So you know how to register, where to complete your KYC. So if you have done all these steps already, all you need to do is just begin your spot trading, and that is possible only after you deposit your funds. Guys, you all know there is a like marketing campaign that's going on. Like we have a lottery that's going on, where you get the chance to win a free crypto basis, the KYC you do and the deposits that you do. So just a second, I'm just logging into the platform. User 90999052, you're still not telling me your name and your details, so that I can refer you by your name and all of that. Anyway, so this is the desktop version of Zbit platform, where you have the trade option. So you kind of get into futures trading if in case you would like to trade in futures and the spot assets. So guys, the only difference between spot and futures trading is, in spot trading, when you are buying, you're basically using all your money to buy the number of units that you're looking to buy, which means when you purchase it, you're actually getting the right kind of units, like the amount of units that you're buying with your own money. Whereas in futures trading, you are basically buying into contracts which has an expiry. Okay, so in futures trading, you get the chance to basically buy like the contracts which has an expiry, which means that either through short selling or through long buying, you can make profits. So whatever be your speculation about the markets, whether the market is going to go down or is it going to go up, you can still make profits. The different type of orders remain same in spot and crypto trading. That is, limit and market orders remain the same. Again, now the difference between the spot and futures trading is, like, you get the chance to leverage out your positions, which means even if you have got like $5 or less than $5 in your pocket, you still want to take a trader which is like trade which is like 5x of your money. You can take a position by leveraging out, which means the exchange platform will give you a loan to basically leverage out your position. So if you have, say, maybe $5, 5x of it, which is like up to $25, is what you can basically take the position. So um, coming to futures trading, you can see there are so many options here. You've got almost 100 pairs that you can trade into in futures trading. The best part of futures trading is you get the chance when you are speculating and you're like too sure about what the markets are going to look like, and you take a trade and you're sure about it. With your speculation, you can actually make trades, and through buy sell as well as short or long, you can actually make profits both the ways. So that's what is the beauty of futures trading. The only difference between spot and futures trading is one different type of order which you may not find it in spot trading. You must have heard about limit and market orders. Limit order is placed basically when you think that the price of crypto is either going to go down, and you're thinking that you would like to buy it at a more cheaper price than what the current market price looks like. Then you place a limit order, and market orders are basically what the price currently is looking like. So limit orders are also known as passive orders, and the market orders are also known as aggressive orders. Now, there's only third type of order which you can find in futures trading and which you will not find in spot trading, is the trigger order. And now, what's the major difference between a trigger, limit order, or a market order? Is trigger order is triggered or is placed in the order books only as and when that trigger price hits. For example, right now you can see it on my screen that Doge is trading at 0.25637. That's the price that it is trading at. So if in case you think that the price of Doge is like going to be, say, let's assume like it's going to be 258 whatever, okay, 0.258, okay. In that scenario, now because you're expecting that the price is going to go up, 0.258 is what you're expecting, and you might be thinking of short selling or maybe long buying, whatever is your speculation. You place a trigger order where you put in the trigger order by tab, like what price you want that to be hit, so that the moment it hits the price, it gets into the order book, and then post that whatever price you would like to buy, whether it is at the market price or you want to again have a price of your own, you can basically put that and hit a market order, like hit a market order limit order. So this is the only option available uh, in extra in a futures trading. Other than that, the limit orders and the futures trading order, sorry, the limit order and the markets order is one and the same. Only thing is, the best part is in futures you kind of get to leverage out your position. So up to I can show you here, you can see this, you've got like up to 75x here is what you can leverage out in Doge, okay. And you can leverage both in cross margin or isolated margin. Now, what's cross margin and isolated margin? Cross margin, in that scenario, all your balances will be used. Suppose in your wallet is lying somewhere around $100 and you've taken a position, say, for about $25 only. But in case your position requires you to kind of fund it and continue for like continue that position, then all the balance which is lying in your wallet will be utilized towards your trade. And in case you have chosen multiple positions where you've taken like Doge, Solana, XRP, whatnot you've taken, and you've used cross margin there, then to maintain all the positions, the the money which is lying in your wallet, all that money will be used across all the platform, sorry, across all the positions, and it will try to maintain those position basis the money that is lying in your account. So in case of as a beginner trader, never use cross margin because it's a bit riskier, and if you try using isolated margin, that's much better, because you will not be overspending anything, you will not be utilizing way too much than required. So that's what we want you to understand, and not get into something which is too risky in the initial phases. Guys, get this thing and clearly. If you are still not understanding, you see there is clear cut information here where it kind of tells you what each and everything means. So here it's written about isolated mode. It says some balance is allocated to the isolated account. Isolated balance is below maintenance margin. The isolated positions will be liquidated. So you need to have balance all the time to be able to hold the position. In case that money is not there in your wallet, or if it is not there to continue the position gets liquidated, which means the trade comes to an end. And in this mode, margin balance can be increased or decreased. So that's up to you. While it is a riskier thing, the more you keep on adding the margin balance, the more money from your pocket is actually going into it. So it can be a riskier thing. And suppose even after adding margins, you're still not able to hold the positions, you can be at a very great loss. So be careful on the kind of leverage you keep taking, whether it's isolated or cross. Be careful. As a beginner trader, you shouldn't be leveraging out more than 2 to 3%, or max to max 5% or 5x or whatever you are in your balances. So that's trading tip from my side. And here is the this is where you kind of place your orders. You have your limit orders, you have your market orders. You can see here clearly, if in case I would like to place a market order, I'm going to take the I'm going to take like 10%. So which means I have $25 dollars here in my wallet, in my futures wallet. So $25, like 10% of $25 is what it is going to utilize to be able to place my order. Now my order can be either a open long, which is like I'm buying it, speculating that the price is going to go up, or I may open a short position assuming that the price is going to go down. So in whichever case, like if I am not leveraging out, or I'm not trying to hold the position, then immediately within minutes or seconds, like if my speculation doesn't like fulfill whatever I'm speculating, then the position gets liquidated then and there itself. So that's for limit and market orders. But trigger orders, as I told you, you can always set a trigger price where you're estimating that the price is either going to go up or going to go down. You can put your own price. Then here you get the chance to put the price as per whether it's market or your own limit price, which you want to set. You can do that. And you can check the size of the transaction that you would like to do, whether it's 10%, 20%, 50, 100, whatever you like, you can do that. So I hope this is clear for you guys how you do it. This is like very simple, and even more simpler than this is the spot trade. So spot trade, you can see there are just two orders here. You can see limit order or market orders. The only problem here will be you wouldn't be able to sell in spot trading until you hold a position, which is like you hold a unit of it. You can buy it, you can always keep it in your wallet, that's possible. But in case you want to sell, you really have to have units, number of units to be able to sell. You cannot open a sell position without having to buy it. So understand that's the major difference between the two. And you're going to buy the units that you're going to buy, and then you put a sell order, but you can't in advance you can't sell. The way in futures you are allowed to sell even if you don't hold anything, any units or anything, because there you're just buying the contracts, you're just buying a speculative contract, assuming that the price is going to go up or down. That's all it requires. So I hope this is like clear enough for you guys. Other than that, you can have a look at the interface. It's a very user friendly interface with all the things that you need. So in case you want a trading view of it, here is a trading view where basically you can see the charts, you can change the charts as per your requirements, you can change the time frames depending on what kind of trading you're doing. So if you are a day trader, or you are a, maybe if you're a scalper, 1 minute, 2 minutes, 3 minutes, 5 minutes, these time frames are good enough for you. But if you are somebody who is a swing trader or a day trader, then 15 minutes, 30, 45 minutes, up to 1 hour chart is good enough for you, just to use the overall trend, what it looks like on a longer term perspective, whether it's an uptrend or it's a downtrend or it's a sideways trend. You can always use bigger time frames like 4 hours chart, or you can use day charts, or you can use weekly charts to be able to determine what it looks like overall from the long term perspective. So hodlers or investors, people who basically want to hold their trades for longer periods and longer perspective, then they basically use bigger time frames. For scalpers, as I told you, the smaller time frames are good enough to take small trades here and there. But one very important thing which you need to also understand is the volume that you're trading. It all depends. Sometimes with like lowest point moves also, like 5, 10, 20 points move also, with big volumes you are able to just crack, like you're able to scalp and just get out of it. But if in case you have a very small position, like you have minimalistic kind of capital, after all your fees deductions or your taxes and everything, you still might not be able to get great amount of profits within a small move. So you have to be careful in terms of how you are actually prioritizing your, like how you are allocating your capital based on your risk appetite and different kind of strategies that would fit in to give you the minimalistic profit that you're supposed to within a trade that you're looking for. So within 5 minutes, 10 minutes, whatever you're looking for, that should also depend not just about how you speculate about the markets, but also it kind of depends on the volume as well. So be careful on that front. And as I say always, that cryptocurrency basically is very risky. Some of the cryptocurrencies like move about around 18-20% also in a day. Like for example, sui for that matter moves about 18-20% percent even when the markets are like highly volatile. So in those scenarios, if the market is able to move positively like 18-20%, it does have the capacity to even go negative in that same similar manner. So you might lose out on all the money. So be careful of what you basically put for trade. Only invest that much which you think you can afford to lose, and be careful on whatever trades you're doing. At this point in time, markets are doing well because of this US dollar weakening, and the markets moving in positive front on the government shutdown and all of that. So there is definitely a positive awakening here. So the markets are moving in the positive direction. All the cryptocurrencies seems to be having some good amount of positivity here. So when the markets are moving in positive direction, go with the trend, follow the trends, and basically you can trade in the direction of trend itself. But in case of uncertainties or markets going down, or it's in the consolidation or pullback phase or something, then you have to be like very careful in terms of putting trades. At this point in time, we will have a look at if we are getting any buy or sell positions while we are actually doing some kind of trade here. So we will pick up Ethereum here as our as our point to discuss, because Ethereum is one of the most one of the highly used and good utility crypto, which has good amount of liquidity in the market. And basically you can see how I do the technical analysis of it, and then you can use the same thing of basically you putting it on your own charts to be able to get the desired results that you're looking for. There are a couple of things that you need to keep in mind while you're spot or futures trading. It's a simple thing. While I don't tell you always to depend on your indicators, because indicators itself by like one or how do I say, one indicator by itself is never an accurate decider. So you always have to use it as a combination of maybe different indicators to get different results and to be able to make right kind of decisions there. So to begin your crypto journey, first and foremost thing, as I always say, is to determine what the price of crypto should look like. Whether you're buying it at a expensive price or you're buying it at a cheaper price is something you need to understand. While you can use the indicators, another very important mathematical tool which I keep sharing with all you guys, which you can also use, is the NVT ratio. Use that to determine if the current cryptocurrency is at fair value, undervalue, or it's on the uh, fair value, undervalue, or overvalued. So if you see the cryptocurrency hasn't reached its overcapacity or overvalued, uh, capacity, then you can basically think of buying it. And how do you determine that? Is basically by calculating it. The the formula for it is market capitalization divided by the volume of transaction which it is trading for the past 24 hours. That is how you determine. So if you have heard about something called PE ratio, profits to earning ratio, sorry, price am I sorry, I'm so sorry. Price to earnings ratio, if you have heard about it in the world of stock market, is the same mathematical or the statistical method or methodology to understand if the current price what you're paying is expensive or not. So in cryptocurrency we use this formula called NVT, which is, the formula is, remember this again, the market capitalization divided by the volume which it is trading past 24 hours. Once you determine that and you are sure that basically it's undervalued or it's fair valued, then you have the opportunity to get into the market. The very next moment you get into the market, you go onto this particular page to determine its 24 hours low and 24 hours high. So let's just have a look at Ethereum's 24-hour high and low. So 24-hour low has been 4281. 24 high has been 4423. So so you can see what is the range, 4281 to 4423, and what is the price currently. It is trading at 4398. So it's almost nearing the day high. So should you buy at this present capacity or should you not buy is the next question. So the very beautiful indicator, the bestest indicator, which I personally use it all the time and it works really well. So you can see on my screen, I've got RSI divergence indicator, RSI indicator itself. So this indicator basically is a momentum oscillator. It's also called, speed. It kind of like measures the speed at which the crypto is moving, or the way the market is functioning. So whatever the wherever the price is moving, okay, whether it's moving up or down, what this indicator tends to do is it will show you based on that amount, like whatever the price is on the charts, whether the market has reached an over exhaustion levels. So if you continue to see market is moving up, which means that market is reached its over exhaustion levels of, like, after buying, after the buyers being strong, they're continuously buying, and prices taking and they're taking the prices up, like you're just seeing the price going up, and till the time it reaches the over capacity, that is where the overall market will head to. So what it means, I'll tell you. So RSI is always has a scale between 0 to 100. Now when you are trading, you need not go for 0 to 30 capacity. or you need not always worry about something above 70 to 100 capacity. All you need to do is your benchmark should be lying at 70 and 30. So when you see on the charts RSI is above 70 level, that's where you can start selling. I'm not saying that you have to wait till it reaches 100. Traders will basically take trades even the moment it reaches 70. Some may, exit the position at 70 itself. Some will wait for it to go more like for 80, 90 or whatever. Like you can see here currently, the prices are at 70, the RSI is at 75.37. Okay, so it's in the exhaustion levels already. And there are some kind of, you can see on the candle side also, the price is getting rejected every now and then. You can see the price tried to reach till 4410, and then the price got rejected twice until now because the buyers were trying strong enough to take the price more further up, but sellers somehow kind of got it down. Now again you can see in the next 1 minute candle, you can see the price is again shooting up, which means the buyers are becoming strong here. The capacity, or अगर इसको मैं इजी सी भाषा में बोलूं, it is nothing but the price is becoming very expensive. If I say right now, when we are looking at 1 minute chart where the price is at like 4415, so it's the most expensive price for Ethereum to buy. So for retail traders at this moment, should you buy or sell? Then the answer is you should be selling at this point in time because the price has already become very expensive. But that's on 1 minute chart. How about the bigger time frames? Let's have a look at bigger time frames like 1 hour or 4 hours, so that we know where are we on that side. So on my 1 hour chart, I can see it's reaching the exhaustion levels. It does have some more capacity for it to further go up until it completely goes exhausted, where the buyers don't want to further enter into the markets and they don't want to buy further. So from there, the selling starts happening. So 1 hour is still having some little capacity here. Now on the 4 hours chart, you can see 4 hours chart is showing again over capacity here, over exhaustion level. But because there is still little more capacity, the RSI is still at 75.94, so it has the capacity for it to go till 100. Like in very rare cases I've seen it reaching 100. It usually reaches about 80, 85, 90, and then from there it kind of reverses back. So when you see that the price has reached its over exhaustion levels on the 4 hours time frame, it's time for it to kind of bounce back, and that is what happens. So at this current stage, you can see on the bigger time frames also it's in the exhaustion levels, and on the 1 minute time frame you can see the traders have started taking profits from here. So you can see the price is slowly shooting down. But like I said, it does have capacity. So still, when it is short, in short term, just bouncing back or pulling back, it can further go up, which is a very, which is a possibility. So um I hope this is clear enough for you guys. RSI basically has another indicator called divergence indicator. So whenever you see on the price chart that the price is trying to go up, making higher highs, but you're seeing a different scenario altogether on the RSI divergence, which means the price is just making the opposite moves, like making lower lows or something, then it is clear. It is a classic example. In fact, I've shared this within the community also. Maybe if I get that like maybe if I get some more information, I will share that also in the community or with you guys live. That if price is going up in the higher highs scenario, like in the higher high direction, but on the RSI it's just making opposite moves, then it's a clear indication that there is basically a divergence coming, which means there is going to be a the price is going to come, like pull back. Maybe there's a price is either going to go down. That is what it indicates. So this is what you need to understand. Just a sec. Okay. Guys, so far, I hope whatever we are speaking is making sense and you guys are able to understand what we're talking here. If any further questions or anything that you would like to ask, please feel free to ask. Uh, because I don't want you guys to just, I don't want you guys to basically, get stuck somewhere. So let me know if you have any kind of doubt so far. So price is trying to basically at this moment trying to retrace back. And what I'm going to do is, because I can see right now it's clearly like after exhaustion levels, it's like trying to pull back a little, and the buyers again at this point in time are becoming a bit stronger. So the price is again trying to retrace back. At this stage, if the moment of the candle was not so fast or quicker, then I would have definitely used something called Fibonacci retracement here. So that's a tool that which you can use to see if price is going to retrace or it is going to further like go down and completely change the trend. So but very important question and very important thing that we all need to know and understand is that price basically has some so you can see right now clearly that price basically is trying to come back. It's like trying to pull down a bit because what normally happens is like price will never ever go in this direction. I'll show you something. Just a sec. I have to open my brush. Okay. So whenever price is trying to go up, you can see it always will be going in a up and down direction. It will always, you can see it will make up and it will always make higher highs and higher lows always. It will never be like this. It will never be like this. It will never be in a straight direction. It will always be like it'll go a little up, then it will come down. It will go up and it will come down. It will go up and it will come down. So it's always this way because what happens is at some point in time the buyers they buy it, the price goes up, and then probably from here some of the people or some of the traders who would have taken positions maybe a very long time ago, I don't know, I can't completely say whether it's the buyers within this zone only are trying to take profits, or if it is somebody who is basically taken trades when the markets were more down and somebody taking profit. So the profit taking happens here and then again the price pulls back. Like in this scenario, you can clearly see right now when we are in the 1 minute chart time frame. Just a sec. The price tried to reach this level, which is like 4422, and from here the traders basically started taking profits, and there is a minor pullback, and again the price tried to go up, but then again the sellers became stronger and in this zone, and basically the price tried to pull down again at this level. And here again you can see the sellers are becoming more prominent and more stronger. So in this scenario, now the price is trying to reach, like, it is right, trying to go back. It's and now when market is like pulling back immediately, there's no problem. But if the price is going down and you're not sure how much like level will it retrace back, or will it completely go down, or will it like pull back after a little while, what we need to do is, what we have to do is, like, we will close this particular indicator and we will add here our Fibonacci retracement. Okay, auto Fibonacci retracement, and we will analyze if the price is currently in the retracement zones or it has surpassed those levels, so that we know if the trend will continue, in the sense the price will continue down, or if it will you can see, so when on the Fibonacci retracement tool, on the Fibonacci retracement tool, it takes about the recent high and the recent low that it has touched. So you can see it took the recent high. So the recent high was 4422, and it took the recent lowest point. So this was the lowest point here, 4404. So here you can see, if the price in case has to retrace back, which in normal terms, if I say in retrace, matlab वापस से pull back हो जाने के लिए, so the price can reach up to like 0.38 or like 0.5 levels, and then can pull back, and the uptrend can continue. But in case you see that the price has reached 0.5 or 0.38 and it's still not able to uphold this price, which means the price is not bouncing back from these zones, it usually means that the price will now continue to rally downwards, which means the downtrend is going to, not downtrend, I would say, the price is going to basically move down. So sometimes it may happen, it can also bounce back from these zones. So it is possible, very much possible, all these Fibonacci levels can be crossed. Like right now you can see on the 1 minute chart, it is reached all the levels. It's surpassed 0.5, 0.3, 0.2, all the levels, and it's here. So if price bounces back from this zone, probably this was just a minor pullback, and then price is now again trying to create a new high. But in case if it is surpassing, like for example, this was its previous, you can see here clearly, this was its previous high. So if there will be a break of structure here, which we are able to see, still right now there is no clear break of structure, honestly speaking. Let me just take a horizontal line here and draw this. If it is crossing that horizontal line, this horizontal line, then there is likely the trend is going to reverse, the price is going to further go down. So if I mark this on the, I'm going to mark it on this indicator also. If I use my break of structure indicator here, like smart move, smart money concepts here, you can see there is a break of structure here. Okay, as I was telling you guys, that there is a break of structure even before I actually marked it. There is also change of character, so which means that the trend is changing. Break of structure usually means trend will continue, but change of character is when the market is indicating to you that the mark, basically the reversal is likely to happen. So you can see the previous high was in this zone, and now the price is basically not pulling back from the zone. If it is still pulling back, the chances are that basically it can continue the uptrend, but in this scenario it's already reached the level, which means the price is going to go down. So guys, you can see it clearly. It's crossed the Fibonacci levels and so you see guys, like I was mentioning, that if price crosses the Fibonacci levels, it usually means that the downtrend is likely to happen. The price will move. And the moment it hit zero level on Fibonacci, it was clear. I'm removing my Fibonacci for now. Okay. Just to remember and to, or you want to memorize, you can. The price usually, if it has to continue in an uptrend or it has to pull back, usually retraces back mostly from the max it will retrace back is from the 0.7, 0.6 or zero point 0.5 zones. Sometimes it may hit 0.3, and in rare cases it might even hit 0.2 and 0 also. Still, till this zone also there is capacity for it to bounce back. But if in case the previous the zero zone is crossed, then there is no chance for price to retrace back, which means the short term pullback is not possible. I will close the retracement right now to show you the other indicator which I've added here, which is the change of character and breakout structure, which was another sign for all of us, the price, whether it was going up or down. So this was your level. Even before actually using the indicator, I placed the horizontal line to show you guys where the breakout structure or the where the change of character has happened. So this was your previous high, and price, if it has to bounce back, usually it will bounce back before this zone only. So before the previous zone itself, it will bounce back. So if it was to go further up from this level only, it would have bounced back and it would have moved into this direction. But because it was not able to withhold in this level, it further went down, and this is where it is right now. Now price is trying to basically come from here. So there is clearly a breakout structure is nothing but it's the continuation of trend. Breakout structure has not happened in this zone. Breakout structure has happened in the previous zone, but here is the change of character. Change of character is, it means that the downtrend has happened. From uptrend, it has moved down, moved like while it was going up, now it has come down. That's what it kind of indicated. So BOS and CHOCH, understand this small, very important thing. Breakout structure is usually when the trend is likely to continue, and change of character is when basically it's indicating that the price is likely to move in the opposite direction. So if it was uptrend, it might be a downtrend. If it was a downtrend, it might be an uptrend. So it applies to both of them. It's not like it is only applied to uptrend and not to downtrend. It is for both, but from whichever angle it is changing the direction, it is what it reflects. So you can use this indicators. You don't need to manually put this uh, So until here, I hope the session is clear, session is understandable, whatever we are talking and whatever we are discussing. I will basically continue talking more about it, and I'll be changing some more indicators, giving you more insightful information and useful information about what's happening and what is, like, different crypto, like what is the different, what different indicators are used for different things to understand and to be able to take the kind of decisions. It's just not these, but there are so many that we have that we need to understand. And I will be taking a small 5 to 10 minutes of break, and then I'll continue talking about other indicators as permutation combination, because one indicator by itself independently cannot be used for trading. You have to use it as a combination of different indicators to be able to get the right kind of perfect positions, whether it's for buy or for sell. All right, guys, I'm taking a small 5 to 10 minutes of break, and then we'll continue talking about the different indicators and the different setups and strategies. All right. So guys, I'm back, and like I was telling you, like we were discussing about Fibonacci retracement and breakout structure and change of character. So at this present time, like you can see, price is again trying to bounce back. So there's a, like, you can see here clearly there is a W pattern that is created here, which is a, double bottom is what we call it in the language of trading. So whenever W is forming, price usually, tends to go up in the up direction whenever a W is formed, and whenever an M is formed, which is double top is what we call it in the language of trading. So here M was formed, and you can clearly see after the M was formed, basically the price went down. Now there is a W pattern which is getting created. So price is likely to make an uptrend and bounce back in this direction. So if the buying pressure continues at this point in time, it will basically do that. But at this present time, let's have a look. I'm going to delete all the drawings here because it's kind of getting a bit confusing here. So you can see now at this stage, after the price has bounced back, now it's trying to again move in the upward direction. So price did not further go down, it's again bounced back. So at this point in time, now this is its new high which it has created. So if it is basically surpassing this level, then again, as you see, it will be basically a change of character, and the price is going to go further up. But if it is not able to break these levels and it kind of again bounces back in the downward direction, then the price will continue to go down. So let's watch it for some time, like for couple of minutes. So the buyers are trying to become strong here at this zone, but price is getting rejected every now and then. We have the indicator on any which ways. So let's test this indicator, how far it is accurate, whether it will give us the indication at the right point in time, or if it is going to so guys, you can see there's a change of character here, it's being pointed. That means this indicator is working here. See, it broke past the previous high here. Change of character is nothing but now now it is indicating that the price is going to go up. So if the buying is going to be strong at this level, now the upward trend is going to happen. So one prior indicator which I already gave you even before anything else should have happened is the double top which happened and the price went down, and now the double bottom has happened and now the price will basically move up. So this is how market usually performs. This is how the market moves, and this is where it will be. So let's see, the W or the double bottom pattern has been created. So this pattern usually signifies that the price is further going to go up. There was one indication, plus the change of character that it pointed out, that was another indication. Let's see if these two signs or whatever the move has happened, will it be accurate for us, or if buying is not going to be strong in this scenario, then basically we will be seeing the price going down. Now another thing which you can always identify, there are two more indicators which you can use at this point in time, which can tell you if the buying is strong or not. It's one of my favorite indicators which I usually use, and it's directional movement index indicator. So you see, looking at these lines, don't get confused, or don't panic. It is a simple indicator. Here you can see there is an orange line, there is a blue line, there is a red line. So here this blue line means basically it's DI plus line, which also stands for buying pressure, or already, or all right. And the orange line stands for DI minus, which stands for selling pressure, and the red line is for the trend. Now none of these lines are actually telling you about any kind of trend reversal, trend change, or anything as such. It only indicates, like you can see on the top, on the corner. I don't know if you're able to see these numbers. I'll move it a little more here. So if you're able to see these numbers here, you can see these lines always has to be they have to be always, just a sec, I'll just try to move this here. They always have to be above 25. So you can see right now 19.21 is what the DI plus line is, which means the buying pressure is very weak here. Not very weak, buying pressure is weak. The selling pressure here is becoming stronger. So now the price is going to go down. That is what it is indicating. So one thing which we basically saw was the change of character that happened here. All right, it means that the price was basically trying to break through the previous high that it was at. So it broke through that it indicated. But here now you can clearly see on the DMI indicator that price, the buying is becoming very weak. Okay, it's come to 19. So if buying moves past 25 on a scale, then it will definitely be on a it will be moving in the positive direction. It will be moving up. But just in case it doesn't get stronger than 25, then basically it is going to be here, and the downward pressure will continue to build up. So let's see what will happen in next 2 to 3 minutes, if the buying pressure will build up, or selling pressure will build up. At this current moment, in this very 10 seconds that we have, the buying pressure is not so strong as selling pressure. But if it continues, then basically price will tend to go up, and it will break through, and the price will go up in the upward direction. Guys, any questions for me so far? You can ask me anything. You can stop me and ask me, or you can ask me to repeat. Sorry, guys, my system got disconnected. So guys, I hope whatever guidance has been, there's whatever we are discussing, you guys are able to understand. So still on my DMI, I can see that buying, there's a tug of war that's happening, which means both buyers and sellers are trying to, have a fight here. And it clearly sees it's seen buying pressure is at 20.36 and selling pressure is 24. So selling is taking over the buying right now. The sellers are taking over. So it's just moving in the sideways direction right now, guys. So the W pattern was not clearly formed here. Usually, like I will also add, I'll try to remove this DMI for a second and I'll try to put my RSI here. So here there was basically an M pattern was created, but here it was clearly there was no W pattern that was created. Usually when there is a W that forms here, the price will go up. So if in case it's not formed, like it doesn't show up here, let's just wait, because it's just making very minor pullbacks and then just trying to go up. By the way, I forgot to tell you guys, here was our sell position. I think we started the session when it was already at its high, right? So this was basically sell position. So you can see with this indicator, it also rightly pointed at the tip here that it was the weak high that it has made here. Okay. Here at this tip could have been a buying point. I'm so sorry. While I was explaining you guys, I should have rightly pointed that this is a sell position and that is a buy position for all you guys. And it totally slipped my mind. It should have been a short sell here. And at this dip here was a buy long. So whenever you're trading, do one thing as a practice, that you should be testing the indicators well in, at least 2 to 3 times to be able to see that those indicators are giving you right kind of information and, accurate information to make successful trades. Because sometimes you never know, after all, they are all, tools, and they are all, technical things. So if they are not pointing out at right thing, you might be making wrong decisions. So test it once, twice, thrice, as many times as you can before you actually take on a right kind of trade. And again, because it's near the neutral zones, there are no buy and sell positions for now, because market is just moving in the sideways. You can see it's neither in the downtrend, neither it's in uptrend, nothing. Is just moving sideways because market, these all candles that are forming with long wicks, you can clearly see price either getting rejected or they are indecision candles, because there's a tug of war between the buyers and sellers, and nobody is able to overpower others. So I close this RSI and I'll put my DMI again to see what it's looked like for my buying and selling. So this current position right now, buyers seems to be weaker than the sellers. We can also cross verify this with one more indicator. I will be coming back to that as well. But this indicator is good enough for you to make that decision. But sometimes if you're still confused with where it is heading to, then you can always use it. See, now the DI plus, the blue line which you can see on the DMI indicator is trying to cross the orange line, which is the selling pressure line. So now both buying and selling is on par. You can see now buying has become stronger. 22 is what it reached. So for all the three, whether buying, selling, or the trend to be strong, the positioning should be above 25. I'm going to plot this on the, I'm going to plot it with a horizontal line here. Okay. So whenever you see all these three lines above 25 is when we have to, let me change the coordinates. It's 25. Okay. So whenever it is above 25, it means that particular parameter is strong. Blue line stands for DI plus. DI plus is nothing but it indicates your buying pressure. The orange line is DI minus. Basically, it indicates your selling pressure. And the red line which you see is an average directional index line, which stands for ADX line also. That will indicate your trend strength. None of this will tell you where the trend is moving, but it will always reflect the strength of them. Okay, so right now you can see the buying pressure has become stronger in this scenario. So you can see clearly it's moved past 25 on the scale. So it's at 27 and the price is moving past this. Now there has been a break of structure that has happened. You can see price tried to break the previous high that it has created. So this was its previous high. Now it moved past this. Buying is becoming more stronger here. I'm going to go to the settings of the smart money concepts here, and I'm going to add fair value gaps also, guys. Okay, this is fair value gap that I'm going to add here. Okay, so all the green spots that you see will be bullish fair value gaps, and all the red ones which you will see is the bearish fair value gap. Okay, so let's point it out. So you can see here, I will try to enhance the look a little more so that you guys can see it. You can see here, there is one fair value gap here, fair value. Now, what does it mean? Okay, understand this thing. Fair value gaps are that gaps which basically market while price was moving up. Okay, while price was moving up, the market did not fill orders in this zone. Now, fair value gaps are usually very good entry points. So if you have missed out your chance while buying in this zone, your next setup entry can be somewhere at this level, where either you can take a trade at this support level or either at this support level as your entry point, because price will again come back in these zones to fill it. Now there is no proper timeline, there is no proper timing for it, where it will basically either it'll fulfill those zones within next 5, 10, 15, 20 minutes or next 1 hour or anything as such, or it is going to fill in next couple of hours. There's no proper guarantee. But yes, if in this zones where you see that fair value zones were created, this area will get filled. And if in case you want to set up your next entry point, this is where you will set up. So you will basically set up at the dip here or at this dip here. Usually it's better to set it here itself, putting a stop loss maybe at the dip here, and then basically you can take your trade in this zone. So you can see there is a major sell off that's happening. So this is where selling is happening. So if it actually bounce back to this level, then you will get a good entry point here, which you can use to basically enter into the trade. Okay, right now the selling is getting weaker, buying is still strong. I will be changing it again. I will be changing some of the indicators to show you. Again, there is a break of structure, guys. You can see the indicator has pointed out. So again, it broke past the previous high that it created. So clearly you can see that there is a bearish fair value gap also that got created, which means price moved past that zone very quickly, but it was not able to fill orders during that price move. So this zone, which was even a fair value gap in the bullish fair value gap zone, will also get tested again. So testing of this zone is very much possible, but it can, which is very much possible, it can happen now itself, or it can happen in next couple of hours, or it can happen in next few minutes or what. There's no guarantee on that. We might be lucky if in case while we are actually discussing right now, that zone can see, you can see the fair value gap got created. This should have been your perfect entry point, guys. Okay, this could have been your perfect entry point. Like I was pointing out at this zone, the same way this zone could have been a perfect entry point. See, this zone is again, this zone again got tested. So if on our chart, if it does not point out any fair value gap zone here in the bullish fair value gap zone, then this particular zone, which was previously tested, like which was previously marked for fair value, bearish fair value gap, has been tested. This zone has to be still tested. So let's wait and watch what will happen here. Okay. Okay, so you can see the bullish fair value gap zone again got created here. So the price is moving past very fast, but there are no orders that are getting filled in those zones. I think price is trying to again pull back, or it's moving past that zone to see if there can be the buying pressure at that level can be built or not. Let's see. The previous price also got rejected there. So if the buyers become strong at that level, buyers are becoming strong in that level. See, the DMI indicator is also clearly showing you it's above 34, like it's above 25. So it's at 34 right now. Buying pressure is strong. Again, the price got rejected. So I'm using my 1 minute chart, guys. You guys can use depending on your trading strategy, whether you are a scalper or you are a day trader or swing trader, whatever. Depending on your trading technique and way, you can choose your trading time frames. Scalpers usually who wants to take trades within minutes, you guys can use 1 minute, 2 minutes, 3 minutes, 5 minutes frames, whatever you want to use as the smallest moves that you can pick up. Whereas day traders, whenever you're taking long positions, for you guys, it really don't matter if you want to take trades in next few minutes or you want to take trades in next few hours. So your strategy is totally different from what the scalpers usually do. So now, what is your style of trading that you need to determine? Usually, scalping is not something which can be done by anybody and everybody. Remember this, scalpers are those people who are like either proficient in trading, one thing, or they are the people who have large volumes, like people who are like big investors or traders who have like huge volume, somebody who's trading in thousands, ten thousands of dollars, like more than ten thousands of dollars or things like that. They like to observe small moves, and that's how they want to, you know, take advantage of those little few points here and there, and they like to take trades, and you know, within next few minutes they just close the trade. But for people who are basically having very minimalistic capital, as well as you guys are not you know, having too much of capital, you will have to wait for a big move. So if I measure this on the scale, on my scale, you can see here, from here, from its lowest point. Okay, let me just pick it up again. From its lowest point here, this move was about only 0.92%. So it's not even a 1% move that we're talking about. I'm on a 1 minute time frame. So in just couple of minutes, how many minutes should have been this from this candle? So this candle is at 1319 as per UTC, and right now this candle which is forming here is 1355. So it's just about like how many, or like around 30 to 40 minutes move that we are seeing, where basically it was hardly like 0.93% move. Now people who have like very minimalistic like capitals, imagine like 0.93% of move, can it be a beneficial trade for you guys? Can it be something where you can actually take out profits after all your expenses, like your trading fees and all gets deducted? So you need to you know, like you need to add up, do a bit of math here, and see that whether like your 0.93% or 1% of move in the market is actually giving you that kind of trades. It is possible in futures trading, not in spot trading for sure with minimal capital. But if you're taking futures trading and you're doing some leverage positioning, where maybe even if you have like say $10 and you want to 10x it, so you're taking $1,000 position there, sorry, $100 position there. So that way is basically you can not even fit. I don't think that 10x is also possible here. I think maybe $1,000 should be good enough. Yeah, how much would that be? Like for example, let's do a bit of math and see if with this kind of move am I able to take. I think $1,000 should be good enough. So 4382 was the price, the minimalistic price that it has gone, the lowest price that it went. Let's do a bit of math and see if we were able to get some. Sorry, so $1,000 is what we have. So if you take $1,000 position, which is like you need to invest at least $100 and you need to take a leverage of at least 10x is what I think. So you get 0.22, but then I'm not putting expenses here like the trading fees. You have to also put expenses here. Please remember that. So now the position, the price at which it is trading is 4422. Okay. Imagine the price is at 4422 right now. Yeah, so I think I would be able to make good amount of profit, which is like around $9. But then $9, how would I make it? There is basically expense also attached to it. So there is maker and taker fees also, which I have not calculated. So if I imagine around $4 of like minus $4 is what I do, then I'll be left out with 1,005. So I am still making a profit of $5. So for a leverage position, whether you're buying or selling, for example, I'm just giving you a hypothetical example of long buy position. So suppose at this tip which I told you guys to buy, you would have bought it taking $100 as your capital and leveraged it at 10x. So your 10x should have been $1,000 position that you're taking. So if in case you have taken a position here at 4382 and you exited the market at this position at 4422 and short sell over here. So with this move, with the leverage that I'm talking about, you would have made around $5 as the profit after the fees. But fees I have just hypothetically calculated. Again, you need to check because in spot trading it's 0.1%, but in futures trading there is a different fees that is applicable. So you need to have a different setup altogether for your exit strategy that you have to do depending on the expense or the trading fees you're paying. So I think just a sec, hold on for a second. So spot trading, both taker and maker fees is like same 0.1%, but for the futures trading, if you're doing, it's basically for the taker fees it is 0.05%, and for the maker fees it's 0.002%. So you need to calculate it. Now what's the difference between taker fees and maker fees is, understand this thing, taker fees usually हमेशा जो fees बढ़ के होती है ना, that is your basically maker fees. Like now the major difference is when you are there, like I told you, there are two types of orders that you place. One is the limit order which you place where you think that you want to put it at your own price that you want to buy. But if you are putting if you're putting an order on market price, yani mostly the people who are trying to take positions at the market orders, they are the ones who are the actual aggressive order makers, or they are the makers of the market. So their fees is usually high because they are the ones who is taking away the liquidity from the market. Okay, aggressive orders are the ones who always take the liquidity from the market, whereas the taker fees basically is for they are the passive order makers, where they are predicting that they don't want to place the orders at the current price that it is trading at. They are waiting for the price to hit to a zone, whatever the zone they are expecting it, and then they're expecting the market to move to that direction and then take the liquidity from there. So they're not the aggressive type of traders where they are taking the they're taking the what do you call, they're not taking the liquidity then and there itself. So that's why in most of the cases always the people who takes away the liquidity, and they are none but the market makers. They are also called as market makers because they are the ones who are making the market. They have the power to make the market. Okay, their fees are usually normally bigger or like more than the takers, basically. Sorry, yeah, more than the takers. So that is how it is. Don't get confused between the two terms. सिर्फ easy भाषा में अगर आप इसको समझ like understand कर सकते हो तो इतना ही है कि there are two types of traders, right? One who trades on market prices. Second ones are the ones who trade on limit orders, like they trade on their own prices. They like to trade on their own prices. Okay, just a sec. My CRM has closed. Let me open it. So if the people who basically put orders on market prices, currently whatever the price is going on right now, Ethereum का हम लोग देख रहे हैं, तो basically you can the ones who are placing orders on the market orders right now, they are the ones who will be charged more because they are having the power to move the markets. क्योंकि because there is a spread fees which also needs to be adjusted for the exchange platform, because they're trying to match the order with the current current buyers, sellers, whatever. So in that scenario, basically, they will be charged more because, like the exchange platforms, what they have to take it out as a fees. Also, they will be taking the spread from the current market orders in that way actually. So that is how they are penalized more than the other type of traders. Okay. So this was the weak high which it pointed out. And here you can see on the DMI indicator that the DI plus the buying pressure is strong. The selling pressure is getting weaker. So guys, when I was telling you that whenever on the charts you see if it's a double bottom or a double top that gets created, then price usually tends to move in the upward or the downward direction. So you see the double top was created and the price moved down, and then the double bottom was created and the price is shooted up. So you can clearly see that. These are very small, minor things, minute things, and you need to observe it while you're trading. Don't depend completely even on indicators. Sometimes you have to use your own intuition and your own, analytical skills that you have, that you need to understand the markets, where they are heading, and all of that. So, like I was telling you guys previously, there has been some bearish and bullish fair value gaps that got created. So price is likely to revisit those zones. So if you would want to take the advantage, like I'm not saying that you have to trade on Ethereum, but if in case whichever crypto you're trading and you find that there was any bullish or bearish fair value gaps that got created, so the next entry setup, if you would like to do, you can set it up anywhere below the fair value gap that got created, and from here you can again plan your entry. So this zone will be tested again. Now don't ask me when, how, within how many minutes, within how many seconds, or things like that, because there's no guarantee on it. It may get tested now, it may get tested hours later, it may get tested tomorrow also. Don't know when, you can't say that. So if this zone gets visited, so this is my fair value gap zone. Sorry, let me put a brush here. So this is what my fair value gap zone is. So this area might be tested once again. So if the price like pulls back again to this zone here, then your entry point, I'll show you. Maybe you can enter the trade if you want to take a long position. Where is my long position? Okay, this is my long position. So my entry position can be here. And if I'm just setting a 1:1 ratio, I can close my trade at this level. But if I want to take a 1:3 ratio, maybe let me just see. One is to two, 1:3, both are okay, whatever you wish. If the markets are doing well, take 1:3 or even above that. I have no issue. This is your 1:3 ratio. So your exit point should be at 4422. I think this is what we did some calculations, right? So like we were doing some hypothetical calculations for futures trading, like we wanted to leverage out a position at $100 with 10x as the multiplier there. So with 1:3 ratio, your target should have been 4422. The entry point should be somewhere around 4395, and you can put your stop loss anywhere below 4395. Like, you can put it anywhere below this. So understand this. And if you want to set it more, that's totally up to you guys. No, I'm not, I don't basically advise, or I'm not giving any financial advice. This is all for guidance purposes. So when the markets are doing well, your risk to reward ratio can be 1:3, 4, 5. What you want to set is your decision. But normally 1:3 should be good enough. Like in this scenario, you saw that this is like, on a 1 minute time frame that we are seeing. And you can see that within 1:3, with a $100 investment with 10x as the, leverage there, you're able to achieve around close to $9 to $10 of profit. But you also have to calculate fees. So after fees, maybe you will be achieving somewhere around $4 to $5 as the overall profit. So this is how your next setup should be. And maybe the next setup is like that. But that setup, how, when, and all of that is going to happen, I can't really गारंटी ऑन दैट. अभी शायद हो सकता है while we are talking वो जोन को वापस से टेस्ट कर ले, which is a very much, which is a possibility. And I can see it is reaching that zone. अभी वो जोन वापस फिर से टेस्ट हो ही रहा है, लग ही रहा है. Guys, anybody has any kind of questions so far, please feel free to ask. Anybody has any questions? So selling pressure as again, sorry, not selling pressure, the ADX line, you can see the trend is basically weaker in this scenario. So it's at 17.35, and my selling pressure is at 28.75, which means my selling pressure is stronger than my buying here. So it's 15.36. So my buying is slightly going down now. So looks like the price is trying to retest the fair value gap zone that was created just a while ago. So like I told you guys, if you would have missed out any entry previously, where is your entry point and what are your next targets? Just in case you want to utilize this fair value gap zone, you can use to take an entry. So it's revisiting the fair value gap zone. So if price is retracing back from this particular zone, you know where your entry price is. As usual, this is not financial advice or investment advice, so please do your own research as well. हो सकता है कि प्राइस अभी रीटेस्ट ना करे, यहाँ से फर्दर डाउन ही चला जाए, which is very much possible. But yes, if it is trying to test that zone, then it might as well retrace back in that zone itself. देखो यहाँ तक तो ये पहुंच ही गया है. It's reached the levels. This is where I asked you to take an entry, right? यहाँ मैंने आपको point out किया था कि take an entry at this point, if in case you want to take advantage of the fair value gaps that got created here. Buying is becoming very weak. Oh, my horizontal line also disappeared. Oh my god, I didn't even see. Okay, I will be putting my horizontal line at 25 again. So my selling is still stronger than my buying at the moment. I'm going to basically close this DMI to see where my RSI is standing, because I want to understand if price has reached exhaustion levels or not. Because if it hasn't reached, it will reach exhaustion levels and then again it will bounce back from that zone. So I'm closing my DMI and I'm putting my RSI here to see that. So you see the price try to bounce back from 34 level. Okay, from here only it is bouncing back. Okay. So it does have the capacity to go little further down. So you never know, after reaching a little high, price can again basically pull back till 30 and below zone till it reaches exhaustion levels, and then from there again it will bounce back. So till this level almost the zone got tested. I hope you guys are able to follow what we are discussing here, and if you still have doubts or any questions that you guys would like to ask, please feel free to ask any questions. User 349964768502. Guys, are you able to follow what we're trying to do here, what we're trying to figure out? Is there anything that you guys are not able to understand? Whatever questions you have, be it the silliest to the most intellect question that you can ask, no problem. Whenever on different time frames you see if price reaches the neutral zone, so this is your neutral zone. Let me point it out on the RSI. Let me take my trend line and put it here. This is my neutral zone here. Oh, sorry, I'll take a horizontal line. This is my neutral zone, which is at 50. Maybe I can change my coordinates here to 50. So whenever you see that price is near this zone, better to stop, like never ever buy or sell in these zones, like when it's near the neutral zones, because price from here is uncertain whether it will go up, it will go down. So if you happen to take a position here assuming that the price will go further up, and it basically tends to go down just in case the buying, you didn't check the buying pressure was weak or something, then you will have to, your money will get stuck or your stop losses will get hit because the price will, then after that might be like, it might be coming down until the exhaustion levels, and from there it'll again maybe bounce back. So there are chances either your stop loss might get hit or your money might get stuck for a very longer period of time. So don't ever buy during, near the neutral zones. Either wait until it reaches the exhaustion levels completely down below 30, or use a 70 and above for short selling and the 30 and below for long buy positions. I hope whatever we are discussing here, guys, so far is making sense to you. I am putting my DMI back here because I want to see how my buying pressure and my selling pressure looks like. So you're going to always use, different indicators as a combination of everything, like, for identifying different things. Different indicators have different meanings and different usages. So one very important tip which I also want to tell you guys is sometimes what you see is while you're scalping and you're using RSI, you see that the RSI has reached at over exhaustion levels, which means in the oversold zone. What happens is during that time, you assume that price from here might bounce back and you try to take a trade over there, like when it reached on like less than 30 on RSI in smaller time frames. But what you failed to do there is you did not notice what the bigger time frames look like. So just in case you missed out on that little thing, then what will happen is you will be making a grave mistake where if it's still not reached, it's still over exhaustion capacity on bigger time frames, and if it has to further go down, then you would be still buying it from like either very from near the neutral zones or like very near to the neutral zones on bigger time frames. But whereas on the shorter time frames, it might be at exhaustion levels, but bigger time frame, it still can be near neutral zones and it might still have capacity to go further down. So this also you need to cross verify, like not just on shorter time frames, but on bigger time frames also try to find out if it actually has been exhausted completely means completely. Like I'll show you that example, don't worry, while we are doing it. So now I think is where our fair value gap, the actual fair value gap is going to get tested if in case the buying pressure, sorry, the selling pressure continues to build up at this level, then the original fair value gap which got created, that zone will be tested right now. So buying pressure is weak, selling pressure is strong. Oh my God, what a big move. Oh my God, oh my God. There is a change of character, a fair value gap also got created here. Again, a fair value gap created in the same zone. This is the second time it's getting created. So previously also there was a fair value gap. again there is a fair value gap that got created. Price is again bouncing back, I believe. An indecision candle that is forming there. Okay, it was a fake out. Okay. So again, a fair value gap is created in the same zone, guys. Can you see? Although it tested this zone, but again that fair value gap created. So which means that price may again come back to that zone. Understand this thin, very thin, psychology behind this. Like whenever the price is moving past, like it's making big candles, and there is no proper, like you're using the if you're using the fair value gap indicator, you will be able to find it out, there and then itself. But just in case you by mistake did not use the fair value gap indicator, and you were not rightly able to point out the fair value gap, you might assume that as a maybe a good demand zone or a supply zone, because pri- primarily it can it can mean that also. But if the price is revisiting but like any zone again and again, whether it's on the buying side or on the on the selling side, it definitely indicates the buying and supplying zone only. But still you have to be careful in identifying that small little difference out there. Okay, now one of the very key things is like identifying key demand and supply zones also. So some identify key demand and supply zones as like some traders like to see that, okay, where are the major buyings that are happening. That is what they try to figure out. But in a simple language, if I tell you where your demand and supply zones are, is the major price revisits, the area where the price revisits. Like for example, just about like now we are doing a 1 minute chart, and if I pick up a horizontal line here and I just try to maybe put my horizontal line in the most visited place, like you can see here, although this might not be the most accurate place, but you can see price always try to reach this level and is like always bouncing above it, this zone. It bounce back, then it surpass this level, again bounce back from this level. So the number of times where price hits the support zone or it's like bouncing back from that zone is mostly the zone where there is high demand. So 4399, now in our current scenario where we are like on a 1 minute time frame, we can see that the price is basically bouncing a lot from here in this zone. But this may not be true on different time frames, so don't always accurately be sure that maybe on bigger time frames it can be the same thing. It can mean something else also on the bigger time frame. So you have to for bigger time frames you'll have to put your or spot or plot your demand and supply zones separately. Or the easiest way I'll show you, don't worry, you don't have to plot anything, you don't have to do anything. I will show you one indicator which can act as your support and resistance, and that can be your that can be the best way to identify your most visited places which are highly in demand, from where the price is bouncing back again and again, again and again, again and again. That particular indicator will help you out. Let's just focus on first what is happening here. and then I'll show you that, because I need to change few indicators. Like I'll be closing the current indicators and I'll show you the indicator which can help you identify that. It again created a W pattern, guys. Can you see that? So the price is bouncing back from that zone now. Now it is most likely to go up further. So the previous high that it created, which was a weak high that it created, it might surpass that. I can see the buying pressure is strong here. It looks like it's at 23. So if it continues to build up at this level, so the W pattern, you can see here, there is a double bottom pattern, or the W pattern, which we call, got created here. This zone, W zone. So whenever a double bottom gets created, price is likely to go up. When a M is created, which is a double top, then price is likely to go down. So this is small understanding. Let's see if it will break past the resistance it has created just now. So the highest resistance that it created just now was 4422. That was the week high. So if it gets past that resistance level, you can see right now there is still a fair value gap. Like the previous zone did get tested, but a new fair value gap still at this level is there. So now for it to again get retested within next few minutes or a few hours or whatever it is, we'll have to see it. Guys, anybody wants to ask any question, anything, please feel free to ask. Price is getting rejected, guys, again getting rejected. You see, both selling and buying is on par, 22-22 on the DMI indicator. So there's a tug of war that's happening between the buyers and sellers. So this zone, which was previously the weak high that got created, again got rejected. So price is again bouncing back from this zone. So here there's a bearish fair value gap that got created. So what may seem like market is moving up and down in the shorter time frame might be just a small consolidation or a pullback on a little more bigger time frame. So if I change the time frame, then we'll get to notice that, because you see this is almost like, I think, second, third, almost fourth time where price is coming back to that zone. So it means that price is just pulling back and just consolidating in those areas, and not much of momentum is happening. See, again, a bearish fair value gap got created. Same zone. Whenever you see fair value gap is getting created, guys, that is an amazing point of entry. Remember that. Now, because there are two different types of fair value gaps, bullish, bearish, it all totally depends on you. So what you see here, along with getting created, usually indicates liquidity sweep, which means that if this was a fair value gap previously and any buyers who try to take position at this point in time, what smart money traders tend to do is somebody who would have taken a position at this level and try to put the stop losses somewhere below, the smart money traders, they basically shell out, or they basically tend to sell a bit of their holdings and try to move the price a little down, thereby grabbing this liquidity completely and making the normal retail traders hit the stop losses. So if any retail trader basically would have put an order here with somewhere stop loss like below that, using the fair value gap as the trading method or the strategy, their stop losses got hit, which means the smart money traders basically have grabbed all the liquidity here, and they try to again pull the price up. And from here again you can see the price is coming down, and they bought it at a more cheaper price. Like they try to grab the liquidity till here 4399, and they bought it at this zone. So previously, if you remember, our fair value gaps were all over this place only, right? Here, these were our zones. So whoever had tried to use like these zones for entering into the market, their liquidity was grabbed, and this long wick is completely indicating that. Sometimes there's liquidity run, or sometimes there's liquidity sweep. The difference between the two is, in liquidity run, the smart money traders, they grab the liquidity, and then the price basically tends to move in the upward direction only. Like if it was in uptrend, it will continue to be in uptrend. But if in case, sometimes what happens is, if it is already in uptrend and they try to grab the liquidity and then move in the opposite direction altogether, so that is your liquidity sweep. If it moves in the same direction, it is liquidity run. If it moves in the opposite direction, it is liquidity sweep. So they sweep away your liquidity, and then they basically buy it at a cheaper price than what you would have bought it, and make you hit your stop losses, and then move the markets to the upward direction. Price is getting rejected again. Anybody wants to ask any question, guys? You can feel free to ask any questions. So far, whatever we've discussed, I hope is making sense to you guys. Do you still have doubts? Then feel free to ask any questions. Selling is becoming strong. Trend is weakening. You can always fix your strategies based on different time frames, which means you can still use a longer time frame to, you know, take a position, and shorter time frames to check the shorter movements. That will give you a clear indication of where the price is likely to move. And then if in case you want to adjust your positions, you can always do that, and it works vice versa also. You can either use smaller time frames always to take the decisions to enter and exit, and bigger time frames for readjusting or adjusting the positions here and there itself. Okay, that's totally up to you. Some use smaller time frames for entries and exits, some use longer time frames. It all depends on the kind of trader you are. What I tend to usually do is I neither use very small time frames also, like 1 minute or 3 minutes also. I usually take a like between wala way, where I use a 15 minutes time frame sometimes, or a 5 minutes time frame, and I make my positions, like I enter and I take entries and exits according to it. But yes, then I use my long time frames to see how the overall trend looks like. If there is any trend reversal that is likely to happen, or if there is any bounce back or anything that is happening, for those things I kind of use my longer time frames. So the trend is becoming stronger, selling is becoming stronger, buying is becoming weak. Looks like the fair value gap is narrowing down much. So all of this region got tested, you can see here clearly, except this fair value gap which didn't get tested. So still you have scope for it, for that zone to get tested. All the area above this got tested. Can you see, guys? Now if it bounces below this zone is where you can again take an entry point, because this zone is where it is now going to get tested. First it got tested here, now it's coming to this zone. So the first initial setup that I told you guys, that can be used if price reaches those levels. But don't be in a hurry, just in case it kind of bounces to that zone to take a trade. You can always check with the new confirmation, the confirmation of the green candle always, not if a green candle is forming, it means the price is again going back. So at that time you can enter into the trade. Don't get carried away by fake outs. Don't get carried away by uh, hasty decision, things like that. See, it's reaching the zone. It's already reached the zone. There is a break of structure. There is a break of structure. So the previous low that it made. So guys, you have to be careful here. The price will likely move further down this level because there's a break of structure, and because even the DMI indicator is also showing price is the selling pressure is high. So it's reached the previous fair value gap zone. this is what our setup was previously when I was pointing out to you guys that this can be the zone for entry. See, like I said, the price is going down further. That's why I was telling you guys not to haste, not to hurry. Oh my God, see? Oh my God. So selling is so strong, your buying has become very, very weak. Now is the entry setup. The previous fair value gap setup that I told you guys could have come here. This is exactly the point where basically your entry point should have been. And I showed you, if you have missed it out, go back to the streaming again and check the setup I created for you guys. Let me close DMI and then put my RSI to see where the price is bouncing back from. Okay, so price has rightly reached exhaustion levels and is bouncing back from here, but it does have capacity to go further down. So while your perfect, previous fair value gap entry was here, this is where I pointed right last time. So it can further go down because it has still capacity. You can see it rightly on the indicator, and it is going right now, and the selling pressure was always anyways very strong. So till it reaches 30 and below and then bounces back again, you do have the capacity for it to further go down, and then you can. One very important thing which all of you should know is whatever be the crypto that you're buying into, you always have to be sure that you're not buying it at a very expensive price. Like a lot of traders, especially when you guys are starting out, you guys do a lot of mistake where somebody telling you, okay, buy, it's in the hype, it's in the media, and everything is, like there's so much hype that's getting created. So because of fear of missing out, like which is called as FOMO, what usually people do is without realizing what the current price is, and they basically enter into the trade. So suppose if Ethereum's all-time high is 4,973, and because there was a lot of like the market sentiments, like everywhere you were getting to hear, oh, Ethereum is doing so well, Ethereum is at its high, Ethereum is doing really great, you should buy Ethereum, like you get to hear from friends, family, and all of that, right? So when you hear such thing and you don't know if 4,973 was its highest and you didn't realize that, and you tend to buy at that price, then you're bound to be making losses, and you will be basically, like locking your money for sure, or you might be losing out of your money. So what is the cheapest price that you should be buying it at is something I told you in the starting of the session. How to determine? You need to use NBT ratio and determine if you're buying it at an undervalued price or you're buying it at an overvalued price. Overvalued price is like, it's like the expensive price that you're buying it at. And undervalued is when you should be actually buying, which means that the capacity is still underutilized for that particular crypto. So you have to buy it at an under capacity zone. You should always buy. So you see, it's again bounced back before 30 zone only. So there's a W pattern that got created. So price is going to go up. Oh my god, what a big move. Looks like either it's a fair value gap or a. Okay. There is a change of character, guys. Can you see? There is a change of character. There is a big fair value gap got created. Whenever change of character comes into picture, it's always that if it was in downtrend, it will point out at price moving in uptrend, and if it's an uptrend, it is an indication that it is basically a downtrend which is likely to happen. So price was at 27 on RSI, and then from 27 it is bouncing back. There is clearly a fair value gap that got created, bearish fair value gap. So we are so to take a position at this point in time, you can always close this. You can see that it's near 34 almost. So you can cross verify with DMI to see buying pressure is building up here or selling pressure. You can see the trend is strong and the selling pressure is high. Buying is at 9.7, so buying is still weaker here. So price can further go down, which is what it is indicating. So that if price surpasses this level, maybe there is break of structure and then price is likely to continue in the upward direction. You saw that there was a change of character. So there was basically price was moving down till here, and then it came till here, and it rightly pointed out change of character. So change of character means यहाँ से जो downtrend चल रहा था, it kind of indicated here that price is likely to reverse from here. So here is what it is moving. So if it surpasses this high which it created previously, then it's likely to be a break of structure, and then price is likely to move in the upward direction. Again, a fair value gap got created. The price is retesting, coming back to that zone again. Let's see if now at this point in time that fair value gap will get filled or not. So it retested exactly the fair value gap. So if buying is going to happen at this zone, so the bearish fair value gap got tested here itself. Guys, the technical analysis is like fun, like more or less same and similar to all the cryptos. all you need to know is like you need to get the guidance, and once you have that guidance, apply all these strategies, methodologies, and all of that on your trading pair. So if you, even if you're trading in Doge, you're trading in any other crypto, you can use any of it and take successful trades. Also make sure that you're aware of all the market scenarios, like like just in case yesterday, because of weakening of US dollar, there was a lot of price movement that was seen, there was a lot of volatility that was seen. Other than that, there were other than the weakening of the US dollar, there was also US government shutdown that has made the market primarily move. So the government shutdown has definitely brought about significant gains. So Bitcoin basically it kind of surged to around 119K, marking its highest level in more than 2 months. Then Ethereum it rose above like 4,400 levels. XRP, Solana, Dogecoin, all of them also saw increase around 4 to 7%. And then even I think Sway was saying somewhere around, if I'm not wrong, 9 to 10% yesterday. So this rally was like attributed to obviously investors who were seeking safe haven assets, amid uncertainty. So if there are some uncertainties also, they basically tend to, buy into crypto. So that has definitely impacted the market. So major things that the shutdown actually kind of got into picture was there was delayed economic data. So key reports, like the key, including the key non-farm payrolls, inflation data, everything was postponed due to the shutdown because it was leading to challenges in assessing economic health and influencing the federal policy decisions. So you can say if maybe the data was out and something negative was coming out of it, probably the markets would have, or the sentiments would have been negative. But because there was uncertainty, people were thinking maybe there might be some positive news coming in, and because of that, the investors and the traders behaved in positive sense. And traditional markets also experience volatility, and then in traders and investors were increasingly turning into cryptocurrencies because during uncertainties where there is no clear cut clarity, especially when the dollar is weak, for example, when dollar is weak, what does it actually mean? Dollar becomes weak means it becomes more attractive to the investors, where basically, like for example, you had 1,000 rupees which you want to convert into dollars and then buy into crypto assets. So if with 1,000 rupees you were able to get, say for example, hypothetically you were able to get around $10, but now because the dollar is weak and you're able to get say 11 or $12, now your money at disposal or at the purchasing power for you has increased, right? So in that scenario, what people usually do is, okay, now that I have excess amount, okay, I have $1 2 extra, or if I multiply this in more zero terms, like I just told you 1,000 rupees, probably somebody converting 10,000 might be like in excess of say like for 1,000 rupees it's $1 or $2. Like imagine if it was for 10,000, might be $10 or $20 extra for them, something like that. So now because money is more with you guys, the purchasing power is more in with you, then the foreign investments or the trading, the trading in crypto or like buying of crypto becomes more. And people like to buy, demand will increase, and then prices will often rise during that period of time. And because everything is priced in dollar terms, so we know that foreign demand will increase. So dollar is weak means, I just quoted it with fiat currency, Indian rupees. Probably you belong to Nigeria, in terms of naira, your fiat currency, probably that also can become like previously if you were able to get say $2, now you're getting $5, for example, hypothetically. I haven't even calculated the exchange price as of now, so don't don't quote me wrong there. So now you're having more dollars in your pocket. So now what do? You want to basically obviously invest, right? So you will buy into it, and the more you buy, the demand increases and the prices tend to go high. So weak dollar is a sign of crypto prices going up. and that's a normal, investor or trader behavior. So I think you get the strong normal psychology behind it. So it weakening dollar is always a benefit, and cryptocurrencies, will tend to increase in demand, and positioning them as an alternative store of value. And it also, because there is increased volatility during such periods of time. So it will definitely be a good source of at that point in time, it is a good time to invest. So that is what it is. So you can clearly see my DMI is showing the trend is very strong. So currently it's a downtrend. That is what we can see on a smaller time frame. So just in case, I will show, as I told you, that you don't need to create support and resistance levels, right? I was telling you don't have to do that, because there is an indicator which can help you do that. So I'll show you one thing, just in case you're always confused which trend it is, what it is, and all of that. There is one indicator which will help you solve your demand and supply problems, which will help you in drawing automatically the right trend, what it is. So if you don't know what trend it is, that indicator will help you. So I'm going to close my DMI here. So DMI, I can see clearly buying is weak and selling is strong, and my trend is also very strong. I'm closing this and I'm opening my favorite. Again, this is another favorite indicator of mine, which is called linear regression channel. Okay, now looking at it, please don't basically understand, like, get too like boggling or something like that. I'll show you how this indicator works and how this can be used. Is basically, you can see there is an upper band, there is a lower band. So this upper band acts like a resistance for it, and the lower band always acts like a support for it. Now you have the option to go into the settings and change the length. So right now it has taken 100 candles into picture to assess your overall trend. So you see, the if you want to change this to 200 candles also, you can always do, because it will measure it from 200 candles level and tell you where the trend is heading. But if you don't want to go for too big number, you can adjust this as per your requirement. So I usually prefer to keep it 100. Now if you see, on a shorter time frame, we are seeing this. You can use it even in long time frames to determine the overall trend. So whenever the price reaches your resistance zone, sorry, support zone, or below that zone, is where you basically take longer buy position. This is where your longer buy position is. And whenever the price reaches this upper zone or the upper band, this is where you take a shorter sell position. So this indicator is basically the middle line which you see is a regression line, a slope line. Basically, it's a mathematical calculation. If you would have studied in your school, college time, or university time about linear regression, it kind of tells you the slope where the price. So this particular middle line, which is like in RSI, how we have that neutral zone, right? The same way, this middle line is an average price line. So it kind of correlates that, it shows that this is where the average price is lying. And these two bands basically are at an standard deviation of 2. Okay, which means if price is moving at a standard deviation of 2, this is where it will head to, and this is where it will come down to. So this particular indicator gives you all that information. And if that's getting too much to understand, the easiest way to understand it is uh, upper band acts like resistance, lower band acts like support, and this midline is like a neutral zone on RSI. So whenever the price reaches your upper band, that is where you short sell, and whenever the price reaches below your support is where you long buy. Now you got to know where to, now you got to know where your support and resistance are lying. You don't have to manually draw anything. Okay, so Why I wanted to even use this is because this will also determine my overall trend. So if you can see, I'm just using 100 candles, period, and I can clearly see, okay, see this, where it is heading. Can you tell me where is the slope is moving in the downside direction, moving in the downward direction. So you can see that there is a downtrend that is happening. If it was maybe like, wait, let me open a brush. If it was maybe the slope and the intercepts and the standard deviation, all of them are moving in this direction probably, then you could have said it is a it is basically uptrend. But because it is moving in this direction, it is basically downtrend. So this is the zone basically where you buy and do long positions, and this is the zone where you short and sell positions. There is no hard and fast rule that price will always touch the support level, and it will bounce back from the support level only. It can always bounce below the support zone also, and uh, it will bounce back from that. The best way is, usually what you should do as a smart trader is to always buy below support zones only if you are a retail trader, because these zones are where normally the smart traders take trade. And just in case you put up trade here, your stop losses are going to get hit in this zone, and they will grab your liquidity in this particular zone, and they'll buy it at your stop loss and then push the prices up. So you are the one who is getting fooled here, so don't get fooled in this zone. Always remember, try to buy below the resistance zone, sorry, support zones. And if in case you're still not sure whether the price will go down further the resistance zone or not, always cross verify it with either RSI or cross verify it with DMI to see if the buying pressure is building up or the selling pressure is building up. You clearly see that selling pressure is building up, then you can still wait until it reaches below the resistance zone, sorry, support zones, and then you buy it. Okay, so that you don't fall victim of liquidity sweeps here, or you don't get fooled by the smart traders. Remember this, the smart traders are always placing orders below the support zones so that they can eat away your stop losses. Remember that you buy it at this zone, you put a stop loss somewhere here, they will eat away your stop, they will eat away your losses here. So try to buy it at the tip, the most down, like exhaustion level of it, and till you see that a green candle or one or two green candle does not form, don't try to even take a trade. That is my suggestion on it. Until unless you see that price is like trying to move upward in the up direction, don't even try to take a trade when it is like just moving down. Okay, so that you don't get yourself trapped either by liquidity sweep or by the liquidity run. So that is how you should act. That is how you should oversmart the smart traders. Okay, so you can see clearly this indicator has pointed out weak low. So this is the strong high that was created, this is the weak low. Guys, any questions for me so far? You can ask. So, as beginner traders, one of the most heard questions that I keep on getting is like, what trading pair should I pick up? How should I trade? From where should I begin? And all of that. So, my answer to this question is basically you need to assess two things, not two things, three things actually. A is how much capital you're willing to risk. B, what is your risk appetite? So, is it low risk, high risk, or medium risk? And for the capital also, how much money? Is it $10, $100, $1,000, like $10,000? What is your capital level? Third thing is your financial goal, whether it's for short term or it's for long term. You want to be a trader, you want to be an investor. So the moment you are able to answer these questions, three questions to yourself, then you are ready to start your trading journey. So if you decided that you want to be a trader, then every day, like looking for right kind of position, sitting in front of the screens, watching the markets and picking up the right scalping strategy or picking up the right day trading strategy is what is very important. Second thing is, if in case you choose not to be a trader but you want to be an investor, then basically picking up positions which can be used as hodling is your next second thing that you should be looking at. Or in case of different risk appetites you have, then maybe your trading pairs and your trading strategies should also change there. So if you're somebody who is having low risk appetite, then your type of cryptos should be basically uh, large cap cryptos like Bitcoin, Ethereum, and all of that, because they're stable and there is not much risk associated with them. But if you are somebody who is a medium risk taker, you should be into the mid cap zones like Solana, BNB, Cardano for that matter, or even Avalanche, or even Chainlink, Sui. These all come into the mid cap and mid risk zone. So these can be your cryptocurrency. But if you come in the high risk category, then low cap projects, new projects, or meme coins, they can be your significant choice. Okay. So that is from the risk point of view. Now coming to the other thing which you also have to understand, now what is low risk, low capital projects, mid capital projects, or high capital projects. So you need to understand that market capitalization, how do you calculate it? It is nothing but the current price of the crypto into the circulating supply. So I'll show you here Ethereum. Like for example, you get onto this page, you can see here clearly how, while the market capitalization amount is mentioned here, like it's given directly, you don't have to calculate, but in case you want to calculate it, what you can do is, I'm going to move this a little. So it is nothing but this current price which you see 4,401, which it is trading into this circulating supply, is what will give you the market capitalization of that crypto. Okay. So just in case you want to find out if it's large cap, mid cap, or low cap, you have to know that the market capitalization is calculated with the formula price, current market price into circulating supply, is what you will give you the market capitalization. So if you want to know if the crypto belongs to large capital, mid capital, or low capital, remember this always: if it is less than 1 billion US dollars, then it basically is a low capital category kind of a crypto. If it is anywhere between 1 billion to 10 billion, it comes into the mid capital category. And if it is anywhere above 10 billion, then it basically is a large cap or a more stable cryptocurrency. So in this scenario, you can clearly see it's 531.16 billion. So it means it is a large cap category. Remember, I'll repeat once again. If it's a low cap, it's less than 1 billion. If it's a mid cap, it's between 1 to 10 billion. And if it is above 10 billion, basically it's a large cap category. Okay, this is what you need to understand and trade accordingly. So whatever suits according to your requirements is what you will see. Now, other than that, you also have to analyze liquidity. Now, although the crypto might have large capitalization, which means the capitalization can be above 10 billion, it can be a large cap, but is it having good liquidity is the question. Now question, if you're like if you get this answer that yes, it has good amount of buyers and sellers and my money is not going to get stuck if I place an order, then you are in the right category. So Ethereum being one of the good liquidity, what do you call, with good liquidity, you can see here the, if you click on this, it has a liquidity of 8.14%. So the bigger the number is, the bigger the ratio is, it means it is highly liquid kind of an asset. So you always have to choose cryptocurrencies which has good liquidity in the market. Yani they should have enough buyers and sellers in the market that should be able to give you the successful trades that you're looking for. See the volume, you can determine with the volume also. See the volume is 45.29 billion. Wow, imagine 45.29 billion volume is what it is trading. So imagine the kind of buyers and sellers that are sitting in the market for this particular crypto. So this is why I always say look for these numbers, which matters a lot. All right, then other than that, what you also have to see is you have to review the fundamentals behind the projects, guys. Use cases, team, community, partnerships, developers, adoption, whatnot, tokenomics, roadmaps, and whatnot. If it's a new project, I mean, it's highly risky, so you have to analyze all of this for sure. But even if it is a old project, stable like Ethereum, BNB, Solana, whatever, still you need to identify the team, the developers behind it, the community, the use cases, the adoption, the partnerships, the new developments coming, the hardware development, the software developments, the upgrades, anything that has to do with the particular cryptocurrency has to be known so that you can get into right kind of trade at the right time. And then as usual, we are doing anyways the technical analysis, so you need to have that kind of knowledge. And you also have to have a mix, just in case you're starting out. I would in initial phases suggest that you can just go for one crypto to begin with, maybe in future spot, whatever trading you want to go. But just in case you want to basically take more position, because a lot of people like to hedge against one position, or they also like to do arbitrage, which people think that if they take a wrong decision of buying or selling into a wrong crypto, then they want to cut down on their risk, so they take another position in other cryptocurrency. So you want to diversify, that's totally up to you, but that all totally depends on your level of expertise and the kind of analytical mind that you have, the speculative mind you have. I mean, most of your speculations are true, correct, and all. You can do that, but if you still think that you still have doubt in terms of whether the market is going up or down and you're not able to analyze it, better to avoid such kind of things. Don't get into too many things and complexities in the initial phases, like getting into arbitrage, getting into hedging, getting into too many positions at one point in time. So that's what it is. Now, another important thing, risk to reward ratio, as I was telling you guys, in the moving markets and the volatile markets, you can always keep your risk to reward as 1:2, 1:3, 1:4, whatever you want to. But if it's in a downtrend, the market is not moving, market is not volatile, it's in a downtrend, try exiting 1:1, 1:2 max, but you shouldn't be waiting too long, because in that scenario, when the market is already down, the chances of your money getting stuck or the stop losses getting hit is very high. So please don't get into that zone at all. Try to get away with 500, try to get away with 1:1, 1:2 at the max. Okay. Now, rule of thumb: bigger capital plus low risk. If you have, then stick to large caps. And if you have smaller capital with high risk tolerance, then experiment with low cap or high growth coins. And always invest only that much which you think you can afford to lose. So don't go for too big numbers, don't go for too much. Like if it's the all the saving that you have in the world and you're using all the saving of the world, don't even think of putting all of it, because in a day, if the markets are like highly volatile and the market is moving like 18-20%, like in case of some meme coins or in case of some mid cap coins, then you can lose out on everything. Remember this. And not every day is going to be a great day for you guys. If anybody is trying to give you this happy go lucky story that, oh, you're always going to make profits, you're always going to have good days, trust me, they are lying to you, because there is not something which is too good to be true existing in this world. There will be days where you will make losses, there will be days where you will not get profits immediately, there will be days where your money can get stuck or your stop losses can hit. As a trader myself, I trade on an ongoing basis. Trust me, there will be like around four to six successful trades in a month where I will be making some good amount of profits, but rest of the days there will neither be some good positions. Sometimes there will be sometimes stop losses getting hit, or there will be days when my money will get stuck. And this I'm telling you with my own experience and my own expertise into the market. And that now, as you all know, that I sit into the market day in day out, like almost 9 hours in the office. And even when I'm actually going home, sometimes I'm before the screens and I'm always watching the market. So being in the industry and being in front of the screens for such a long period and duration of time, I still kind of tend to have these kind of days where my profits are not happening immediately, or my money getting stuck, or my stop loss is getting hit. So it's very much normal. Don't take it like, just because you had one bad trade and you lost some money, don't take it as ultimate thing and cry over it. Just get out of it. There will be time again where you will make profits. One loss, it's okay, you can still make profits. There will be good and bad days, you will come to that level. So while we were talking, we got a good sell position here, and I really didn't point it out. Here is what you could have taken a short sell position. See, from here the market again started bouncing back. So this is where the short sell position could have formed. So this particular indicator is one of the beautiful indicator which you can use to take a buy and sell. It's a very like, you don't have to manually draw anything. This indicator itself is just good enough to get you the trades. The moment it reaches here, you take short sell, and the moment you take the reaches below the lower band zone, you can start buying it. So it almost works on the same principles like RSI, more or less same, but then the meaning of it is different. Remember that. And remember also that if you want to be a little more smarter, then where are your pain points? If there are whale movements that are happening, if there are how to outsmart the smart money traders, you have to always check for those points and see whale movements and where the trend is heading, and then place your trades. So guys, I think I've been speaking way too much since very long. I would like to take a 5 to 10 minutes break, and then I'll continue talking. There's only half an hour left over, and then tomorrow we have another session that will be between 4 to 8 p.m. That will be with me. But yes, tomorrow, Friday, Saturday, Sunday, these 3 days basically we come live like almost 8 hours a day, which is like from 12 o'clock until 8 o'clock in the evening, which is Dubai time. Now you need to check it as per UTC or your local time, whether you belong to South Africa or Nigeria, or you belong to India, you belong to Pakistan. Check it as per your timings, whatever timing is, and then like join the sessions. And wherever you feel comfortable with me, join my sessions. If you feel comfortable with the other co-hosts, please feel free to join those sessions. Ultimately, all we're trying to do is we are trying to conduct these sessions to give you the kind of guidance that you guys are looking for, teaching you every now and then what are the key points to remember, what are the key things to look at while taking trades, successful trades. We all want you to be successful, so please utilize these platforms as much as you can to ask your silliest of the questions, silliest of the doubts, so that each and every doubt is clarified here, and then you can make successful trades. And I will be taking a 5 to 10 minutes of small little break here, and then we'll continue talking much more about spot and futures trading. So take care, and I will join you in next 5 to 10 minutes. Hold on until I come back. So, guys, I'm back, and we are into the. We're almost heading towards the end of the session. So, the last half an hour that is left out. So, I think while I was not here, you guys must have observed how this indicator changes its, its overall slope, like how it kind of reacts to the price, the way price is moving, that indicator like positions itself accordingly. So the trend, gets adjusted, in and out in the similar fashion. So when before leaving for the, for the break, I pointed out to you guys that here should be your sell positions. And you see the moment the sell position started happening, it slowly now basis the current scenario started adjusting the slope accordingly. So at any given time, basically it will adjust your trend and will show you how it is moving ahead. Now, like I told you, either you can just look at the upper band and the lower band and take a trade blindly, but not always that should be your way of doing it. You also have to confirm it a little with other indicators here. So the other indicators, definitely, like I said, you need to cross verify and cross check it with maybe RSI to see if it has really reached over exhaustion levels or not, which means overbought or oversold conditions are being met or not. Sometimes even after the price reaching the support zone, sometimes it's still not exhausted, so it's not reached its cheapest price still, so you'll have to wait further for the price to go down. So what you will see is usually, like in this sometimes scenarios, the price might have reached the support zones, but on RSI still there is capacity for it to go over exhausted. So just wait until you reach this zone and for further price to drop down and then take a trade. And the same goes for the resistance also. Probably it might have reached the resistance level, like the upper band, and it crossed that level, but still it would have not reached the overbought conditions on RSI, which means it still might be above 70 but still under 100. So in that scenario, like, you do have for the capacity for price to further go up. So wait until there. And if you start seeing that there are sell off that are happening, normal traders, what they tend to do is, like, from 70 and above, they try to take trades, they try to sell off and get rid of the position. And even the this particular zone, when they reach support zones, people tend to take trade at this zone, and they start buying from here. Now it totally depends on you. I don't say buying at this position is also wrong or selling at that position is also wrong. It totally depends how you're positioned. Like I already mentioned to you guys, you need to check the different time frames too. Like, while on the smaller time frame it might have reached the exhaustion levels, but on bigger time frame there might be still capacity to for it to go exhausted. So check that once, like on bigger time frame, then make a move whether or not you should take a trade. That is your first step. Second thing, also you should wait for the green candle confirmation, which means if a strong green candle is forming, or when you're trying to take a short position, if a strong red candle is forming, is only when you take a trade, because that candle has to form. And you don't get carried away by fake outs also, because fake outs are very normal. Fake outs basically will happen, and sometimes you look at the candle looking at fake out, you'd suddenly take a trade, but then it turns out like it was a fake out, and you might get trapped because of that. So be careful when you're taking a long position. Make sure that you're not buying at the red candle, but you're buying when the green candle starts forming. And for the opposite of it, on the short position, make sure that the strong red candle forms, and then you start taking a short sell position. So whatever positions you're taking in futures trading, Whatever you're leveraging, be careful on every aspect of it, guys. Every penny counts, so be careful of everything and take successful trades. Don't get carried away with wrong decisions. See here, I don't encourage you guys to take trades during this zone, especially when it is near this respective zone. So this is an average price zone. Also, you can, like, call it like a neutral zone for the RSI. How RSI has a 50 neutral zone here, it's almost same. This is an average price where basically price tends to be. And from here, if it is trying to move past this, mostly you should avoid taking trades because there's a lot of uncertainty in this zone, whether price will go down or whether the price will go up. There's no certainty, so better to avoid taking trades during near the neutral zones. Always better to take near the exhaustion levels. Here or here is where you should be taking trades. But if this setup works for you, then I am not advising. Like I said, I'm giving my opinion. May or may not work for you. Maybe you might be somebody having big volume, you want to take the small setup here, the position here, and just try to take trade between this zone. Very much okay, but yes, the risk associated with this, with that, is very high. Just in case market just flips away, moves in the opposite direction, you have a lot to stake here. Imagine, like, you have to wait till it reaches. If market doesn't move, like, you take a trade in this zone and market doesn't go in this direction, and rather it went in this direction, so you have to wait for it further first to reach the support zone. Then you have to wait till it reaches the exhaustion zone, and from here the market again has to reach the support zones. Then again you have to wait till here it reaches this zone. So you see how much time are you wasting and how much opportunity you're losing in this much time frame. So that's the reason I always tell, don't ever take position here. What you can do is, when you see one crypto in this neutral zone, leave that crypto for that day. Go to another crypto, check its formation. If any other crypto is near support levels or below support levels, go buy this crypto at this zone. So even if you're missing out the opportunity of not buying here, or you don't want to take the position, another crypto might be in this position, go buy this, and you might be able to make profits. The same amount of time which you're wasting in this zone, this zone, this zone, this zone, you can utilize it in buying something else at the same time. This is what we call it as opportunity cost in in economics. If you have studied economics as a subject, then you'll know opportunity cost is basically at one point in time taking advantage of the markets or taking advantage of the current time to be able to make profit or to be able to make some gains, without having to lose on the other side. Like, if in case you're putting money in one thing, and god forbid if you make a wrong decision, you lost, you don't make money on it, you lost on that trade or something, then you are definitely losing out that opportunity. If not, if in case you would have made the right decision, you would have been making money elsewhere, but you chose to put your money in this particular. For example, hypothetically, you uh, traded in this zone and your money gets stuck here or your stop losses get hit. Whereas at this same time, some other crypto was basically in the exhaustion levels, like in the oversold zone, and you could have taken a position here, but you ended up taking a position here in some other crypto. So you lost the opportunity, right? So this is what we call it as opportunity cost in the economic theory. So take advantage of such kind of things and take right kind of positions. Even okay, Ethereum is not giving you position right now because it's trading near to neutral zones. Don't worry, you still can go in other different cryptos, check it out for their uh, levels, what it is. But yes, like I always say, you also have to basically find NVT ratio. NVT stands for network worth and network value to transaction ratio, which is also, in normal terminology, if I say it's PE ratio, price to earnings ratio. So that will help you understand basically whether your current cryptocurrency is undervalued, overvalued, or fair valued. So you're always buying when it is undervalued or fair valued, but you're never ever buying when it is overvalued. If it is overvalued, you are always selling during those zones. If you are seeing it is undervalued or it is fair valued, even if it is at fair valued, wait for it to either go undervalued or wait for it to either go overvalued, so that when it reaches overvalued zone, you know you have to sell, and if it reaches undervalued zone, you know that you have to buy at that zone. So, and network value to transaction, NVT, I'll write down the formula for you guys, make a note of it. I have shown this formula in a lot of sessions, but I will still write down this for you, so that whenever you are determining your NVT, you can do this. NVT is basically market capitalization divided by volume that it has been trading past 24 hours. Okay, and the points for it is, if it is less than, sorry, if it is 0 to 20, it's undervalued. If it's 20 to 50, it's fair valued. And third condition is more than 50, it's overvalued. So I'll also write down what are the conditions. Undervalued, long buy position. Fair valued, no position, don't take any position during this time. You have to wait either for it to go undervalued or overvalued. And then if it is overvalued, then you short sell during this time. So whatever you're trading it, remember this thumb of rule. NVT ratio, how do you calculate it? Network value to transaction ratio, you calculate it by taking the market capitalization, dividing it by the volume that is trading past 24 hours. So that basically volume which you're trading past 24 hours, you will basically get some resultant output here, right? For example, you get a result like say 15 here. After you input the values in this particular formula, you get the result as 15. So now what does it mean? 15 means which category it will fall to? It will fall to the undervalued category. So if it falls under undervalued category, then what do? We do longer buy position during that time. So we will see to buy it at a position. Now directly buying also is not possible. You again just looking at it, the moment you calculate, and okay, it is looking undervalued for, so okay, right now whatever the market price is going on, I'll go and buy it. No, you will not do that. You will see after that, you will come and check the 24 hours low and high. You will check. So the low is 4281. Wait, hold on, let me just refresh it. Probably it has changed. So my 24-hour low is 4290, and my 24-hour high is basically 4423. Now you know what is the range it is trading at. So if you calculate this on a percentage change calculator, let me show you percentage change calculator. How much move is that? Percentage change calculator. I just need to put the numbers there. Okay, so my value 1 is 4290. Okay, 4290, and my value 2 is basically, how much is it? 443, sorry, 4423. Guys, remember this keeps changing every now and then. So as in when you're taking position, you need to calculate as at that point in time. So you see, between this figure, the low for the day to the high of the day, if you compare, it's a 3% move that has happened in 24 hours. Okay, it's a 3% move only. So now you need to take an estimation. What should be your estimated buying position? What is your estimated? What should be your average price that you should buy it at? Now you saw that it's a 3% move only. So now you go back to your charts. You put a time frame, whichever you want to trade, like 1 minute, 2 minute, 3 minute, 5 minute, whatever you want to do. If you're doing scalping or swing trading or day trading, up to 15 minutes, 30 minutes also, you can put a time frame. Then I showed you all the indicators for various purposes. Utilize that, and based on various indicators, you know when to buy, when to sell. If you're using linear regression, you know when to buy, when to sell. If you're using RSI, you know when to buy, when to sell. And if you're using Fibonacci also, then you know when to buy, when to sell. And then you have your smart money concepts, where basically you can see if it is a change of character or if it is break of structure that's happening. Based on that, if it's a reversal that's coming, or if it's the trend is going to continue, you know everything. Now you will be able to take a successful trade. So these are the steps that you need in order to start a successful trade. I hope whatever we have discussed from the scratch, from till the time we are coming to where we are discussing this, I hope this is making sense to you guys. Just in case you still feel stuck, you still feel that something is not making sense, or you're not able to connect the dots, then please feel free to ask me right now in the stream. I'm live between 4 to 8 p.m. Dubai time, or you can also reach out to me in my community, Zbit Community Live. So there are two pages right on the application. On that you have options for deposit, for like more option. In more option, you have a category called as join community fans group. There you can go and join the fans group, where I keep sometimes sharing some signals, some useful information and things like that. So that can help you enhance your knowledge levels, and can help you in taking successful trades. So guys, if this has made some sense to you guys, feel free to share it with the people who you think can benefit out of this. Share your love and support to us, because we work very hard behind the scenes, behind the camera, where we kind of try to bring the most quality content possible to all you guys, and also try to do as much research as we can to bring you the best quality content for all of you. So please show your love and support by sharing it with friends, family. Tell them also to start trading. Tell them to start trading on Zbit, because we're giving all the guidance that you need in order to start your crypto journey. So now crypto is no more something like a rocket science, or something like a difficult thing to begin with, right? So it's become more easier. So the more you kind of get yourself acquainted with, the more you get used to the terms, jargons, the terminologies that are being used, you will definitely go to some level. That is for sure. Like, as you keep practicing, like there's a saying, right, that practice makes a man perfect. So you will be perfect at some point in time. It took me also some little time. I too learned through my own mistakes. I learned through different other traders too, through different mentors too. But there's always, like, this is always a ladder that we keep climbing, and we will get there. So don't worry on that front. Even if you make some loss making trades, it's not the end of the world. It's not the end of the life. Only invest that much which you think you can afford to lose. So even if you're losing a little money here and there while you are still practicing, and you're still getting used to it, and you're still getting accustomed to the trading world, it's okay, because there will be days where you will make amazing profits. And trust me, I was once upon a time in your place too. So you will be there where you will make amazing profits. In a day, I have withdrawn 100 $200 also, which is very much possible. And if I can do, I think you guys can do too. There's nothing rocket science here. There's nothing difficult out there. It's just conviction and the right kind of attitude, and a bit of little patience, and controlling on your emotions is where it will take you to skyrocket, and to it will take you to the cloud nine or zones where you can't even think. It's unimaginable profits that you can get onto. And like, like you might be hearing a lot of in like, trade gurus or like, influential people talking about that Bitcoin is going to hit skyrocket, the sky is the limit. Trust me, yes, it is true, sky is the limit, and you can't even imagine what level of profits you can make just with right kind of attitude, right timing, and a little patience here and there, and a bit of control on the emotion. So if you know how to control your fear, and also you know how to control your greed, then you will take right decisions, control your trade positions according to your according to the emotional level that you are at, and then you will be basically taking successful trades. Trust me, follow this all, and if in case it has worked for you and it has made any kind of difference in your life, do come back and tell me in the comment section that yes, the guidance is helping, and you want to share your feedbacks. I will definitely look into it, and I'll try to improvise more on it. You want to ask me more things, please ask, and we will continue to work on all the things, all the weaknesses, and try to convert that weakness into our strength, and then trade successfully. Guys, I want you guys as successful as possible, because your success will basically determine my success in being able to articulate and being able to teach you everything that you guys are looking for on this particular platform. So if you make successful trades, it'll be me who will be the most happiest that yes, my guidance has helped you. So please do this for me. And when you come back at a later stage, do share the feedback like, yes, your guidance helped me. I was able to make some successful trades here and there using the, guidance that you gave. So I'll be more than happy. So I think we are heading towards the end of the session. If you do not know me, I'm repeating myself. This is Nida Afreen. I'm the host for Zbit channel, official channel. So do follow, like us on YouTube. We are there on YouTube. We are there on X. We are very much available on the application itself. So there are different platforms that we are there. So share it with your friends, family. Download the Zbit app. It is both available on iOS as well as the Android version of it, and start trading. You get to earn free crypto as well on the platform. So do take the chance, enter your details, use your phone number and your KYC documents to KYC comply yourself, and then enter into the lottery to earn some free cryptos, which you can utilize to basically buy, take a successful trade. And if in case you make some profits through it, you get the chance to keep that free crypto with you, and you can basically add it to your assets. So guys, which platform is giving you such kind of service, where there is a live mentor sitting at almost 3 days in a week, sitting 8 hours a day to help you out in your trades successfully? And other than that, 24/7 customer service, and also you're getting so much like earning free cryptos, getting free trades and things like that. No other platform is offering you these kind of features. So please use our platform to take some successful trades, and do come back with some successful stories that we can be proud of. So I am ending this session, guys. Have a great evening ahead, and I will see you tomorrow at the same time between 4 to 8 p.m. Stay tuned until we come back. This, the overall methodology and the way, the trading analysis or the technical analysis works is more or less same. Tomorrow, I might have some different stories to share, or might have some different, things to discuss. But the technical analysis of it is more or less going to be same. So if you continue to hear some repetitive things, don't panic or don't feel like, oh, it's so boring, or she's repeating again the same thing, because there's nothing that is going to change. It is going to remain same. Only thing is, probably the prices might be different tomorrow, the trends might be different, but all the other techniques and strategies behind it, they are all going to be same. So I will see you tomorrow. Take care of yourself. Have a great evening, and Shabba Khair. Take care of yourself. Allah Hafiz. Namaste, whatever you guys, your religion is to be aapka. Bye bye, and I will see you tomorrow at the same time. Okay, bye bye.